It's 11:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ solidly in the green. NASDAQ 100 index up by 0.5%. NASDAQ up 0.4%, higher right now by 53 points. S&P up 11, a gain there of 0.2%, while the Dow is advancing by 57 points, higher by 0.2%. S&P right now at 44.74. 10-year yield 4.27% with a 2-year at 4.99%. Spot gold, $19.12 the ounce, a little change now, down by $1. We have got West Texas Intermediate crude, also little changed, $88.90 for a barrel. Right now we have got WTI up by 6 cents. Gold, again, down 91 cents the ounce to $19.12, a drop there of less than 0.1%. CPI Wednesday, what about the market outlook given the economic backdrop? Ankur Crawford is portfolio manager at Fred Alger Management. She was a guest moments ago right here on Bloomberg Markets.
I think the expectation is now for soft landing, and there's arguments for hard landing. So I think because of that uncertainty in the market right now, the consumer resilience is starting to taper, the job market is starting to come off a boil. We're going to see a choppier market.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. American Airlines shares, they are lower now by 3.7%. Recapping, stocks higher, S&P up 13, higher by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Darn right it is. One of the best in the business. All right, so Matt, I'm sitting here. I got a 2-year Treasury at 5%. I'm just parking, the Sweeney.
Well,
cash
you do
there,
have
man.
then reinvestment risk, right? Because you can't leave it there forever.
All right, I can just keep rolling it.
I mean, you could, but there's a cost to that, right?
Oh, I see what you're saying. Okay.
So, and I feel like you could get into money markets for the same thing. I mean, my wife is in a Marcus account that
my
pays
daughter's in one of those.
5.3%.
Exactly.
so
Smart minds think alike there.
Yeah.
All right, let's talk to somebody who does this stuff for a living. Ron Conzo joins us. He's the CEO of Wealth Alliance. He joins us live here in our Bloomberg Interactive Broker Studio. Rob, what are you telling your clients here? I mean, 2022 is such a rough year. Equities brutally down. Fixed income down. This year we're bouncing back a little bit, but what are you telling your clients these days?
It's a mixed bag, and I think, unfortunately, the S&P has given a very skewed vision of what's going on.
Yep.
I think it's really giving people with the 60-40 and the 50-50 some pause, and it's a little unfair. S&P up year to date, roughly 17, and most of that comes from 7 stocks, as we all know. But if you pull those out or equally weighted, it's up about 4.5. You look at the 60-50, the 50-50, it looks pretty good. So we're telling people, try not to make the big bets. Watch your fixed income, augment with dividend stocks, with dividend ETFs. I think that's a good play going forward.
We look at, right now, Brent crude is trading for $92, right? NYMEX at 88.89. Is that a sign that, demand is going to be there? The economy is humming along, things are going great? Or is it something that's going to break the markets back, energy prices this high?
I think it's one of many signs that's indicating what's going on with the economy, and this is what the Fed is wrestling with. At the end of the day, you're watching labor do its thing. The CPI report just came out, bumped up a little, but core just keeps going down. So just energy is one component. If you look at the core and pull out energy, you know what? Economy going down, inflation going down, and that's what the Fed wants to see. Will they hold interest rates? I think so. Do I see an uptick? No. But it's anyone's game.
But you think higher for longer? You don't think the Fed's going to have to come in and cut next year?
No, I think higher for longer. If they do cut, it'll be well into 2024. But depending on what the data shows, if we still keep getting this downturn in core CPI and also core PCE, 2 big indicators, we'll see. And labor report coming out Friday is a big one.
Yep. Are there when you talk to your clients, do they want to be taking on risk here, or do they want you to be pulling back on risk? Where were they in terms of just thinking about how they feel about things?
Well, we all, not just clients, but we're all those type of people that when you see growth go skyrocketing up. Year to date, it's up 9%, and value is only up 1%.
Okay.
So what happens? You look in the rearview mirror and say, hey, I got to get in on this game.
Yep.
So people have tendency of saying, how do I get that growth manager who is up 30% or so? As advisors, and I'm speaking for many, you try to temper that, and you try to say, hey, let's get back to basics. Value is up 1%. Time to get in. Time to get a good dividend. Augment your bond portfolio. Don't play that trap and chase the hot dot. That's where we're going.
You're preaching to the choir.
Darn right.
Although you're a momentum guy too, right?
I could be momentum. Yeah.
I mean, the
I don't have to be
cues.
smart. I just have to be timely.
The cues have been on fire this year
I know.
and over the last 5 years, and as we keep telling people, they outperform every active manager out there. Is that going to continue that tech growth, run that we've seen for so long?
Well, tech is, the two letters that are driving everything right now, AI, right? And you look at companies like Microsoft, NVIDIA, and even someone says Tesla. Tesla's become from a car company to a technology company. So it's hard to say and hard to think that AI won't keep driving tech on some level, but it has to, I believe that. And you never want to say 100%, but I think tech is here to stay, and interest rates will obviously affect that. But AI is the next big boom. We'll see where that goes.
How do you use ETFs in kind of your work with your clients?
Yeah, ETFs, we mix ETFs with active managers, different asset classes. Like on the value side, I just said, there's some good ETFs that are doing their thing, giving a 4% dividend. So we're a mixed bag, as many advisors are, trying to mix active management with ETFs. We typically don't play all in one space, and try to get some diversification and play out and ride out these storms and get a good rate of return going forward.
Don't put all your eggs in one basket, Paul.
Yep, I know.
Very new thought.
He's a muni guy.
Yeah.
By the way.
Muni guy.
Yeah,
right.
exactly. I mean, do you now we've got rates up where they are? How do you think about just fixed income and credit in general? I mean, again, I'm sure you get phone calls saying, "Hey, just buy 2-year treasuries for me. I can get 5% and sleep like sleep well."
Paul, the 100%. We're asked that every other day. I think the big surprise was the fixed income market for 2022. Everyone was bullish on it, big time. What happened? Interest rates just rose, brought the market values down, and now total return fixed income is flat. But you can't ignore the yield that you're getting on those bonds. So bonds are good. They're giving a great yield. Are you looking for a big, play on total return? Didn't happen this year. Could continue. We'll see if rates moderate or come down.
But in general, you sound pretty conservative. So you're not rushing out there trying to wring out the last basis point of alpha.
No, Matt. No. We're not trying to do that. We're trying to get, I think the name of the game is consistent returns, limit your volatility, and walk away with something that's respectable. And I think the Wealth Alliance does that pretty well.
So I guess the question for a lot of folks is, is that 60-40 portfolio, a lot of people last year are saying, boy, that's got crushed. That's a thing of the past in this modern world. How do you think about that? It feels like you're kind of still there with the diversification.
The 60-40 really was an eye-opener last year. Bonds made that happen. Fixed income dropped 13 to 14%. That hurts. So suddenly everyone was down on the 60-40 in 2022. Year to date, the 60-40 is keeping up with an equally weighted S&P and a Dow. Suddenly the 60-40 looks pretty good. So I think it's a strategy that could be augmented, but it's a good strategy.
Are there some sectors of the market that you really like here? I mean, our previous guest at Fred Alger Asset Management, they're growth investors, and they're just all in on this AI thing. Are there some areas of the market that you like here, or some sectors that you like right here you think your clients should really be paying attention to?
Well, more so on the asset side, as I keep saying. I love the value play. I love walking away with a great dividend, and it recently got beat up. So, things like that make me feel pretty good, and I feel very comfortable going into it. Chasing growth right now is scary, incredibly volatile, and that's not something we like to do. So I like the value play. That's where we're going.
On the other hand, Apple is a bet that seems to never go bad, right? I mean, Paul's angry and has been for years that they don't pay a dividend. But they buy back like $100 billion of stock every year.
Look, Apple is, you struck gold if you bought Apple way back when. It's anyone's play. It's a great company, and they're doing their thing. But I would have loved to have Apple back in 1980. It would have been great.
What is it? I mean, do you think there's anything out there now is kind of like that you're paying attention to? I mean, is there some name that you guys have, or are you just looking for the kind of the consistency in returns?
No, we're a consistency return shop, but again, hard to ignore the capital outlay that Microsoft, NVIDIA has put into AI. I mean, you have companies that large putting that much money into a play. I got to be honest with you guys, it's hard to turn your back to it.
Yep.
That's why Ankur likes the data servers. Data centers.
Yeah, absolutely.
The server farms.
Server farms. I mean, there's a million ways to play
Well, and the
that
energy
space.
plays there are also key.
Yeah.
Because you got to power those and cool those places down.
I know. It's all good stuff. All right, and you can do that through some REITs and things like that. Rob Conzo, thank you so much. Rob is the CEO of Wealth Alliance. Before that, he was at Morgan Stanley and UBS. He escaped from the accounting business early in his career, so kudos on that. Looking at the market right here, S&P 500 up 1/3%. The NASDAQ up about a 0.5%, so a little bit more of a move here. With our news in New York City, here's Michael Barr.
Thank you very much, Paul and Matt. After 14 days on the run, an escaped murderer has been recaptured today in Pennsylvania. Authorities in Chester County say they used heat source equipment to track down and capture Danilo Cavalcante. Lieutenant Colonel George Bivens of the Pennsylvania State Police.
They were able to move in very quietly. They had the element of surprise. Cavalcante did not realize he was surrounded until that had occurred. That did not stop him from trying to escape. He began to crawl through thick underbrush, taking his rifle with him as he went.
Bivens says one of the Customs and Border Protection teams had a dog with him that they released. Cavalcante was taken into custody in baggy pants, brown boots, and a Philadelphia Eagles sweatshirt. The new COVID shots have gotten a green light from the CDC advisory panel. Bloomberg's Ed Baxter reports.
The panel is recommending the full CDC recommend use for those 6 months and older. It says it could allow the shots to be administered as early as this week. But of course, that will depend on individual healthcare providers getting supply and scheduling appointments. But healthcare industry leaders, along with Pfizer and Moderna, say they have been working logistics already. Financially, it will, of course, help both companies as vaccination administration has slowed. Ed Baxter, Bloomberg Radio.
North Korea's Kim Jong-un vowed full and unconditional support for Russia's Vladimir Putin. The two leaders, isolated by the West, held a summit that the U.S. warns could lead to a deal to supply ammunition for Moscow's war in Ukraine. Tech titans are advising the U.S. Senate on artificial intelligence today. Meta's Mark Zuckerberg, X's Elon Musk, and former Microsoft CEO Bill Gates are attending the closed-door AI Insight Forum on Capitol Hill. Global news 24 hours a day, powered by more than 2,700 journalists and analysts. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding very close to session highs right now, with the S&P 500 index up 14 points to 4475, a gain right now of 0.3%. The Dow up 62 points, up by about 0.2%. The Nasdaq Composite Index up 65, up by 0.5%. 10-year at 4.27%, with a 2-year right now 5.00%. Spot gold down $3.50 the ounce to $19.10, a decline there of 0.2%. And West Texas Intermediate crude oil up now by 22 cents a barrel to 89.07, a gain of 0.3%. Stocks, bonds, and the dollar seeing small moves. A mixed inflation report reinforcing speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. Reaction to this morning's CPI data from Robert Tipp, the chief investment strategist at PGIM Fixed Income.
I think there's going to remain some anxiety as to whether this drop in inflation is transitory, right? They're not going to feel really good about this until they see 6 months, 9 months of a good trend towards low core inflation. But I think this is good progress.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. China is flagging security problems with iPhones, marking the government's first comments on reports that authorities are moving to restrict officials' use of Apple products. Today, Apple shares, they are lower by about 0.7%. Again, recapping, stocks are gaining. S&P up 12, now higher by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller, Paul Sweeney. We are here in the Bloomberg Interactive Brokers studio. We're also streaming live on that YouTube thing. I'm in the process of explaining the internet to Matt Miller. YouTube.com, and you can search Bloomberg Radio there. All right,
I actually posted a video on YouTube.
Did you?
Kind of my first YouTube post.
Look at you going on social.
About the Aston Martin DBX 707. And I think, this week I'm going to post another one.
Are you really?
My handle is Last Call, but it's spelled with 4s instead of A's. So L4STC4LL.
Okay, we'll go with that.
In case you want to look it up.
In case you want to look it up. All right, let's talk IPOs, because we got the IPO market actually have a little interest out there. We got Bailey Lipschultz, who covers all the markets for us, and then Kunjan Sobhani, he leads semiconductor analyst for Bloomberg Intelligence. He's based out there in the beautiful San Francisco office on Pier 3 down there in the Embarcadero. Great stuff out there. He joins us via Zoom. Bailey, I want to start with you. Birkenstock. When I think Birkenstock, I think Matt Miller. And they're going public. Talk to us about this company and what this deal is.
Yeah, the company filed for their IPO yesterday evening, kind of anticipated. Bloomberg had been all over that, expecting that they will target an initial valuation of about $8 billion. Looking at some of the results that they laid out, though, profitable, growing, the two things that investors are really looking for. They're L. Catterton backed, so interesting deal laying out for this company when you look at kind of where we are talking to some of the analysts and investors. Latest in a string of consumer-facing companies that have filed. So consumer, if you're profitable, if you're growing and you have durability, some insight into where you're going forward, seems to be one of the areas alongside tech that there is interest both from the company and from investors.
All right, so that's nothing that Kunjan cares about.
No.
He's a lead semiconductor analyst. Yep. Maybe you're wearing Birkenstocks, Kunjan, but you're focused, I guess, primarily on ARM, right?
Yeah, that's right.
Talk to us about this IPO. ARM is tell us what ARM is, and tell us kind of what the pitch is from your perspective.
Yeah, so ARM is a semiconductor design IP company. They don't make chips; they make an IP which other chip makers can use and for creating chips. Historically, they have the largest, entire market when it comes to a smartphone, 99% market share. Wow. So that's what they were historically. Then when software bought them, the play was that IoT is supposed to be this big thing. So they got into IoT. They have
Internet of Things, right?
Internet of Things, yes, and they're still a dominant player in that market. The pitch right now for the IPO is really on AI, as is for every semiconductor company these days. Right now, they have single-digit market share in data center and AI, but the pitch is that that market share will grow, and they are expected to be the fastest growing in that sector.
All right, so but Kunjan, you've been around. We hired you away from Deutsche Bank, so major upgrade there. Kunjan, you've seen this stuff come and go. You know what the real deal is. They're asking me at the IPO to buy a phone chip design company, but pay an AI multiple. Is that the gig?
That is almost yes.
Okay. Are you buying it?
So when they came out with the initial target of 60 to 70, we wrote that this seems very ambitious, given exactly one of the reasons what you pointed out. But the pricing that they came out, which is midpoint of 50, we liked that as a starting point. We thought that would invite some attractive, positive discussions from the investors, and it seems from the data we have heard that they are numerous times oversubscribed, so that seemed to have worked. But yes, to answer your question, I mean, look, this happens. I was also in banking before, so I've done IPOs for semi companies, and this is how usually the conversation goes during IPOs. People are pitching way far out, like what this can be in 5 years. And the theory is, if you believe that thesis, you're buying it today for lower, because once it gets there, once they have a lot of data center revenues, they're going to get a lot more premium for their valuation, and that's where investors can generate their return.
Very good. Hey, Bailey, Birkenstock. I mean, what's the pitch here? Is this going to be a lifestyle kind of?
Or are they going to
play?
be 5 years out?
Yeah, I mean,
the same thing as they were 50 years before. I mean, what's changed?
No, I mean, they were in the Barbie movie, so that reinvigorated interest with the youths. When you look at their sales, one of the things that stood out in the filing is kind of this push towards direct-to-consumer sales, so trying to cut out the cost of going through a traditional brick-and-mortar or other kind of website. When you look at it, though, $8 billion price, about 18 times forecasted adjusted EBITDA, so in line with a Nike's of the world, though margins are typically higher for Birkenstock. It is going to be interesting, though, what they pitch comps at, though. You look at Deckers Brands, the one that comes to mind, talking to a couple analysts, maybe a Lulu could be really seen as the high end, but it's going to be an interesting, more kind of typical IPO in terms of consumer-facing company that doesn't have these ambitious kind of pitch in terms of AI or massive hockey stick growth.
But do they have to pull back their pricing ambition the same as we've seen with ARM and others? I mean, is this a down round for everybody?
No, because this was bought by El Catterton private equity house backed by luxury group LVMH for essentially $4.3 billion US. So this is actually kind of on the growthier side, which at least in terms of the ARM deal where SoftBank bought them at, which right now would be implied at about a 70% return, they're actually seeing marks up to the positive as opposed to Instacart, Klaviyo, the two IPOs that are set to price sometime next week who are taking quite the haircut.
Kunjan, it is a down round for ARM in a way, right? Because SoftBank just bought a 25% stake from itself for much more.
Yes, exactly, yes. So if you take that as a benchmark, it is a down round, yeah.
But why? What happened there? What's the deal?
I mean, they didn't publicly say a lot, but it seemed to, what we infer from it is two things, that ARM doesn't think, SoftBank thinks that ARM is just getting started. So there will be a lot of more opportunities for them to come on with follow-on offerings at much higher valuation, especially when that data center part becomes a larger portion of the revenues.
All right, so 30 seconds, Kunjan. What's your feeling about AI? Are you drinking the Kool-Aid like everybody else?
Fundamentally, it definitely seems to be here to stay. I don't know, it's too soon to talk about valuation, right? It's barely been 7 months since we started talking about it. But fundamentally, we definitely see real activity and sustainable demand going here.
All right, Kunjan, next time you're in New York, you have to stop by here and see Matt and I in the studio. We haven't met you yet, so you got to
But since you're out there in San Francisco, where are you on, Pier 3?
Yeah.
Is that where you are?
Yes.
There?
Yes, I am, yeah.
You got to go over, there's a market down the street that has a Slocum and Humphrey and Slocum ice cream place.
Yep, right down the end.
They have a flavor called Secret Breakfast, and I'm going to go ahead and recommend that. Secret Breakfast.
All right, so we got that going. And Tadage Grill as well for the eats. Kunjan Sobhani, tech analyst for BIN San Francisco. Bailey Lipschultz covering the markets for Bloomberg News. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Spirit and American Airlines have joined other carriers in cutting their forecasts due to higher jet fuel costs. Bloomberg's Simone Foxman says Spirit's issues go beyond just fuel problems.
That lack of demand, that steep discounting that it's been doing, especially seen it in the past 3 weeks, going to extend, it says, through the pre-Thanksgiving period. We saw some of the reflection of the falling airline fare costs in the CPI data this morning. Airline fares down 13.3% from last August, and this really taking a hit on all of the airlines.
Now, American also pointed the blame to a payment of roughly $230 million in retroactive pay under a new contract for its pilots. Shares of Spirit right now, they're down about 2.5%. American Airlines down about 3.5%. The future of BP and its green ambitions remain unknown following the resignation of its chief executive. We get more from Bloomberg's Will Kennedy.
It's true to say that Bernard Looney's green transition wasn't always popular with all investors, and I think it's clear that this sudden change of leadership will provide an opportunity for some investors to reopen that debate about how fast they go or whether they should concentrate on oil and gas and returning excess cash to shareholders.
Now, shares of BP right now down just a fraction. And Manchester United has signed a major sponsorship deal with Qualcomm Technologies. Sources tell Bloomberg that for $75 million a year, the company's Snapdragon brand will become the front-of-shirt partner from the start of the 2024-2025 season. The Premier League team declined to comment. Manchester United shares right now down about 1%. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio here, looking at the markets. Still a little bit of green on there. Not a whole lot of movement. The S&P is up 0.2%. The Nasdaq's up 0.3%, 43 points on the Nasdaq. Yields steady as she goes. 10-year Treasury about 4.28%. And again, the 2-year spot on 5%. Gold a little bit lower here. Brent crude pretty steady at $92 a barrel. Bitcoin getting a little bit of a bid there, up 0.7%. With our news in New York City, here's Michael Barr.
Thank you very much, Paul and Matt. Danilo Cavalcante, you just ran out of time.
He continued to resist, but was forcibly taken into custody.
Pennsylvania State Police Lieutenant Colonel George Bivens says the escaped murderer was taken into custody by Chester County authorities this morning in a nearly 2-week manhunt that spanned most of the surrounding area. Cavalcante was found around 8 a.m. hiding in a large pile of logs behind a John Deere store in South Coventry Township, about 30 miles from the prison where he escaped from on August 31st. Bivens says no officers were injured in the arrest, but Cavalcante did sustain some bite wounds from a canine.
One of the Customs and Border Control teams, BORTAC, had a dog with them. They released the dog. Some of our PSP CERT members were also there, had him surrounded. The dog subdued him, and team members from both of those teams immediately moved in.
Bivens says he was attempting to crawl away from police in an underbrush when he was taken into custody, and then he was taken by surprise on top of that. North Korea's Kim Jong-un vowed full and unconditional support for Russia's Vladimir Putin. 2 leaders isolated by the West held a summit that the U.S. warns could lead to a deal to supply ammunition for Moscow's war in Ukraine. The meeting lasted over 4 hours at Russia's spaceports in the Far East. House Speaker Kevin McCarthy today defended his order of an impeachment inquiry into President Biden, saying congressional investigations paint a culture of corruption around the Biden family, involving son Hunter Biden's business dealings before his father took office. McCarthy, facing pressure from the hard right, did not directly answer why he changed his position on holding a House vote about an inquiry, but was asked what they're looking for.
We don't have any of the credit card statements from all the credit cards from this shell companies. We don't have the president's bank statements. We don't have Hunter Biden's bank statements. Providing information like that would answer the question.
The Speaker is also struggling to pass legislation to avoid a government shutdown at the end of the month. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Matt.
All right, Michael Barr, thank you so much. We appreciate that. Coming up, Brian King, CEO at Lotus Markets. He's going to join us to talk about investing, ETFs, and what Lotus Markets does differently from other investment firms. Will be in studio. All right, here's a story that jumped out at me. Angel City Football Club, one of the most high-profile women's soccer teams in the world, has been exploring strategic options, including raising capital. It's according to people familiar with the matter. It's not clear how much they want to raise or at what valuation, but Angel City did raise money in 2021 at a valuation of more than $100 million. That's according to the good folks at Sportico, ex-Bloomberg News people at Sportico. Some of the investors already in the company, Natalie Portman, Serena Williams, Eva Longoria, Casey Neistat, Jennifer Gardner. So it's one of the flagship teams in the Women's Soccer League. And, you know, the women's soccer's popularity continues to grow there.
I know that, you know, Alexis Ohanian was interviewed by our own Carol Masser.
Nice.
In part about this and why he decided to buy in. He is, of course, Serena's husband.
Yep.
And I believe his daughter, she's like a 5-year-old, also holds a stake in the club. She's one of the youngest professional sports team owners in America. But
perfect.
His point was he looked at the sum of the parts and realized that a lot of the players' brands individually were worth more than the team.
Interesting.
So why not buy?
Interesting. So we'll see what kind of valuation they can get there. But raising capital out there in the marketplace, trying to take advantage of the surge in interest in women's soccer and strong investors' interest in sports more broadly. So good luck to them. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Very disturbing what's happening here in our Bloomberg studios, but we will soldier on. Coming up, we're going to check in with Jeffrey Cleveland. He's the chief economist at Payden & Regal. Get his thoughts on the inflation print that we just saw. Brian King, CEO at Lotus Markets, will talk markets and ETFs, plus tech talk. Ashley Still, senior vice president and creative for digital media lead at Adobe, will discuss the company's generative AI initiative. So why not AI? More AI. Let's do it. But right now, let's kick things off with Charlie Pellett.
Hi, thank you very much, Paul Sweeney. The Dow, the S&P, NASDAQ, they're all advancing right now. S&P again holding close to session highs, up 12 points now, a gain of just about 0.3%, 44.74 on the S&P 500 index at midday in New York. We've got the Dow up 56 now, a gain of 0.2%. The NASDAQ Composite Index up 58, a gain there of about 0.4%. 10-year yield 4.27% with a 2-year 5.00%. Gold down 0.2%, 19.10 the ounce. A mixed inflation report is reinforcing speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. Moderna says it expects to add $10 to $15 billion in annual sales by 2028 after the launch of new products in oncology and in rare and latent diseases. It also expects COVID-19 shot sales of $6 to $8 billion this year, depending on U.S. vaccination rates. Moderna CEO Stefan Bancel was a guest this morning on Bloomberg Markets, and he was asked about the outlook for his company's sales.
We say that this year we should be $6 to $8 billion of sales, which is still a very significant number for turnover. We have $14 billion on the balance sheet that we got through the COVID sales over the last 2 years. And so we can fund around, we think, $25 billion of R&D growth by cash generated by the business and the balance sheet. And we will also not be shy to partner if we have to.
And right now, Moderna shares up by 4.8%. By the way, you can hear a lot more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Amazon is making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. Amazon up 1.7%. Again, recapping stocks higher. S&P up 11, a gain there of 0.3%. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, Charlie Pellett, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live in the Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio or Bloomberg Global News, and that'll get you where you need to go. A little bit of green on the screen as Charlie was just reporting. Let's see what's happening on the stock level. We do that with Emily Grafeo. She covers all the markets for Bloomberg News, and she joins us live here in our Bloomberg Interactive Broker Studio. Emily, what are you looking at?
Well, the airline stocks are getting crushed today. We have American Airlines down about 4%, Delta, United, JetBlue, Spirit Air all lower. And a lot of this news is coming from American because they lowered their profit estimate for the third quarter. The earnings per share is now seen at 20 to 30 cents, and the earlier outlook was as much as 95 cents.
Oh, boy, hello.
So a big drop there, and they were citing the jump in jet fuel prices, which of course jives with what we were seeing with the CPI report earlier today.
I don't think they hedge, do they? I don't know if the airlines hedge.
A lot of airlines do hedge.
Sure.
Yes.
Yeah. Okay.
And then another cost that they're facing that I thought was interesting was a payment of roughly $230 million in retroactive salary under a new contract for pilots. Yep. So that's taking a hit into their earnings for American.
I guess, and that's an industry thing, right?
Mm-hmm.
Yep.
Speaking of industry things, you see Ford is up today.
Why?
They got like a double upgrade over at UBS. At least that's where one upgrade comes from, even though tomorrow night we could see a strike.
What are we hearing about that strike? It doesn't sound good, does it?
Well, like I said, President Biden doesn't think there's going to be a strike. He said on a number of occasions now, well, at least 2, I should say, that he's confident they won't strike. And you would imagine that as the President of the United States of America, he has some kind of insight.
You would think.
On the other hand, when I listen to Sean Fain, the head of the union, and I look at the delta between what they want and what they're being offered, I can't imagine they don't strike.
Yeah, you're right. The bid-ask spread is huge between those two.
The important thing for me is the UAW is not the Canadian workers.
And the Challenger is being built by...
in Brampton, Ontario.
Okay.
Yeah. So
now, do we have an ET?
I still haven't got any date. I don't know, Emily, if you know this saga, but I ordered a Dodge Challenger RT Scat Pack wide body at the beginning of the year.
Who doesn't?
And I want the naturally aspirated 6.4 liter V8.
Again, who doesn't want
As
that?
anyone would.
Yeah,
exactly.
And
I mean,
so,
genius.
and it's the last year for them. Hence my last call handle on YouTube.
Oh, I get it. It's all coming together now.
These are being called the last call, this group of cars. So,
okay.
But I haven't heard anything since I put in my order in like March.
Yes. Of
this year. Like March, I think, well, March 12th is when they finally confirmed it. And since then, it's like nada.
And you know people.
Yeah.
He's a player.
And they know you.
All right. So we got that on the car front there. How about Moderna? Matt and I interviewed the CEO of Moderna this morning. He seemed pretty upbeat about their business. I know they have the big R&D day this afternoon, which is when they highlight a bunch of their new drugs and pipelines and tests and all that kind of stuff for investors and others. What's happening with that stock?
Yeah, well, as Charlie was mentioning, that stock up over 4%. And it does seem like they are expecting a lot more revenue to come in because of all these new products. Of course, we think of Moderna as the COVID vaccine company, but they
told us
they are not a
they're
COVID
not
they are
COVID
not
company.
a COVID company. The Bloomberg has a story today about this new final stage trial that they have for their mRNA-based flu shot. They had a trial of over 2,400 adults, and the shot produced a stronger immune response against all 4 strains of the flu virus, stronger than a traditional flu vaccine. So
that's cool.
We'll see if that boosts the sales.
Bloomberg makes it so easy to get the flu shot. I mean, you just walk down to LL2, and they got the people there, and they jab you up. Takes 5 minutes.
I don't even sign up.
Yeah.
Wouldn't you?
I just show up there and I tell
like,
the
"You're
lady,
Matt Miller."
I
have to get on the air.
I'm Matt Miller, internationally broadcast radio and television anchor. But I do say, I need someone to hold my hand.
You do.
Because I don't like needles,
Get a little juice box.
Get the little juice box afterwards. We'll get a little sticker. I gave blood today. All right, and we've got some IPOs, right, coming maybe starting tonight and then over the next week or so.
Yeah,
right?
I mean, a lot of action at least to watch on that front. And it's also interesting that the equity market didn't really react that much to CPI. Maybe we're moving on to now more fundamental
it's interesting. I mean, I think
news.
a lot of folks are saying there's something in there for everybody in the sense that if you think the Fed should just stay where they are, you could read that into the data today. Although there are some people saying, the core is a little bit higher. Maybe that means you can give the Fed a little bit more opportunity to maybe do one more raise, but I can't see them doing that.
No, the core is a little bit lower, right?
I thought the core came in a smidge.
The core was 4.3% year over year. Okay, you're right. It's a little bit higher month over month.
Yeah. So
So
just
if you look month over month, it's 0.3, and last month it was 0.2.
Right.
0.2 is a run rate of like 2 and change. That's where the Fed wants to be. 0.3 is not that.
Yeah.
But if you look year over year, it's 4.3% from 4.7%. By the way, speaking of inflation, and we were talking about airlines before, Robert Tuttle, I don't know if you know him from Bloomberg News.
I don't.
He puts out for BFW a list of all the airlines' hedges, which is pretty cool.
Okay.
So
they do hedge.
American Airlines, no fuel hedging contracts outstanding as of June 30th. And we got this data on August 15th. Delta, they have hedges on. Southwest, they have hedges on. Alaska, which has Jerry Garcia on the tail,
of course
they have hedges on. But American Airlines, no hedges.
Interesting. Okay, so it's just a different strategy there. So we'll see about that. All right, Emily, thank you very much. We really appreciate it. Emily Graffeo, she covers the markets for us, and so we appreciate that joining us here in our Bloomberg Interactive Broker Studio. I don't know if I were an airline, why wouldn't I hedge? Other than I just don't believe in hedging, and I'm just going to
I know that some airlines just don't do it.
Right. But it's such a big part of your cost structure, and it's so variable. And there are efficiently priced hedges out there. I would think that would kind of make sense.
But you can lose if you're hedged the wrong way, right? And it's expensive to do. You got to hire a bunch of nerds to come in and.
No, the Wall Street just comes in and pitches it to you.
Their pocket
protectors. You just compare price.
Wall Street's going to come in. Calculators.
Yep.
Yep. By the way, looking at the bond market right now, there's little change on the 10-year, but we're just at 5% on the 2-year.
Yep.
As you were saying earlier, 4.999% on the 2-year. So we're just holding at that level. And, there's not a heck of a lot of movement across asset classes today. Yesterday, my excuse for that, when I was talking to viewers about markets, was that the CPI number had to come out.
Right.
That traders are sitting on their hands until the CPI release tomorrow morning at 8:30. Well, now we've had it.
Yep.
Still nothing.
I know. And then tomorrow, and continue on for the rest of the week. Tomorrow we have retail sales.
PPI.
PPI tomorrow as well. And so I guess PPI X food, X energy year on year, 2.2%. That would be down from 2.4%. From last month, and Gina Martin Adams of Bloomberg Intelligence, she kind of smacks me over the head and say, pay attention to that one tomorrow. So we will do that, of course. And on just kind of an X food and energy on a month-to-month basis, up 0.2%, down from a gain of 0.3% last month. So again, on the PPI, a little bit more of a leading indicator of inflation. That's again still coming down, I guess, a little bit from the period-to-period basis, and
then Friday we get UMISH.
Yes.
Consumer sentiment, and most importantly, inflation expectations. So we're looking for like 3.5% 1 year out, 3% 5 to 10 years out, and then Friday is the 15th. That's the day, according to my inside guy at Dodge, that they're supposed to ship my car.
And that would have an impact on the market.
But I haven't heard anything. Well, surely on gas prices.
Yes, exactly.
Because last time I drove that thing,
so they would ship it from where?
From Brampton, I guess.
And then
Brampton, Ontario.
And then how long does it take to get to the estate at Westchester?
That's the question. Do you put it on the rails and ship it over?
And then truck
it takes a couple weeks, like 2 weeks to a month is what I've been seeing on the forums. For other guys and gals that have ordered these cars and are desperately
there are many
waiting.
gals out there with the Challenger Scat Pack.
There are a few. I gotta say, there are a couple of women that are very prominent forum members, and my concern is UAW negotiations end Thursday night. The Canadian Union, which I don't know what it's called, but the Canadian Union, their contracts are up on Monday, so they could strike as well.
Really?
Yeah.
All right. So, but. This thing we think is
getting made.
Getting made.
Well, I think that my car has been made and needs to be shipped, but no one's giving me the all clear.
All right. All right. We'll get to that. We'll just keep our fingers crossed.
I may put in a call. I'm going to wait till Friday. I'm going to put in a call.
I'll put in a call. Don't worry. I'll call the CEO of Stellantis.
Carlos Tavares.
Yeah, darn right. I'll get his number. Jeffrey Cleveland joins us, Director and Chief Economist for Payden and Regal. Jeffrey, Matt and I were just debating inflation. I think we're on a nice glide path. Matt's a little bit more circumspect. What do you think?
Put me in the inflationista camp, I guess. I mean, there's a big difference between 0.3 month to month and 0.2 month to month. If we do the math and we get the reading that we saw on core CPI, that is the month to month reading for August, and that's maintained by next summer, we're still above 3%. We're like closer to 3.5% year over year. I think that's way too high. That's not an environment, I think, where the Fed would be cutting rates. So that would be contra to what is currently priced in by the all-knowing, all-seeing bond market, which has, cuts beginning sometime in the early part of next year.
What's your growth view, Jeffrey? If we're at inflation 3.6%, that's no bueno. But I can take it if we're looking at continued growth, continued strength in the labor market, continued strength in wage growth. Is all of that going to play out the same direction as inflation?
I think it will hold up. I mean, we're seeing GDP accelerate here in Q3. So it's possible the U.S. grows somewhere between, I would say, 3 to 4% at an annualized rate during the current quarter, which is awesome, above trend. We don't have a contraction in our forecast out through the middle of next year, so we think we will avoid a recession and the economy will continue to grow. Probably unreasonable to expect 3% plus growth over that period, but something like 1 to 2% in the first part of next year is, I think, a reasonable estimate to pencil in. So that's great. We have the unemployment rate staying pretty low, below 4%. That's good. So that'll be fine if you're okay with some inflation and you have continued growth, and that might be the scenario we find ourselves in.
So, the way Bloomberg News is reporting is kind of suggesting that a rate hike is still on the table. You can't take that off. Is that kind of...
Dots go.
Yeah,
Look at
dots go. Dots go. You're right. So how do you think about that?
Well, we think they're on the every other meeting path, right?
Oh, okay.
So it's possible they do skip, but that would keep another hike on the table for, say, November. So I think that you can't rule that out based on this report at all. I think, the big thing for me is what you can rule out, in my view, are cuts in the early part of next year. I just simply don't buy that, given our GDP view, given our unemployment rate view, but also just primarily on inflation. Inflation, even in the best case scenario, will be above 2.5% on core CPI. And I don't think that's an environment where this Fed is cutting. So I think that's where I have the higher conviction.
You get a message just now from Matthew Palazzola.
Yes.
Auto insurance costs, as measured by the CPI, rose 19.1% in August. The 12th straight month of double-digit increases. It's killing me.
I know. Well, you've got a whole fleet of cars in your parking lot. All right, so how about recession? Is that off the table for you?
I think for the time being, it's off. Yeah, I mean, we look at income growth. It's still growing 5 to 6% in nominal terms. So I understand the story that people are telling that the consumers are running out of savings, but income growth really, for me, drives it. They will be able to continue to spend. So I think that will hold up. That will forestall any recession over the next, let's say, 12 months.
All right, Jeffrey, thank you so much for joining us. Jeffrey Cleveland, he is a director and chief economist at Payden and Regal. All right, so if insurance is going up, when the Challenger with the Scat Pack does finally arrive, does that mean we take another one out of the fleet? Do we sell something?
No.
Really?
No.
So you're getting like the Barry Ritholtz thing. He just keeps adding to the fleet.
I need more garage space, and my neighbor's in the same predicament, so we're waiting for a third neighbor to either move out or pass away, and we're thinking about buying his house and just turning it into a shared garage.
Oh, sure. I'm sure the neighbors would love that. Okay.
Because, dude, right now I'm driving the Porsche 911 Carrera T.
Yeah, you can't leave that.
I have to have one.
Yeah, you have to. Yeah. All right. Who can blame you? All right, we're going to have more car talk coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Matt, I could take some of those cars off of your hands. If you need some out there, I'm here for you. Good morning, guys. Inflation may have many consumers tightening their budgets, but the world's largest retailer isn't worried. Bloomberg's Courtney Donahoe explains.
Walmart is predicting a pretty good holiday shopping season. CEO Doug McMillon says consumers are holding up better than they expected this year. He says he's been pleasantly surprised by job growth and a slowdown in price increases.
Shares of Walmart right now, they are up about 0.5%. A wave of job cuts is on the way at Citigroup. Bloomberg's Shanali Bosick has more.
They are restructuring the entire bank and its top management layers into 5 main business units that will report directly to CEO Jane Fraser. I did also just recently, right now, obtain a memo that Jane Fraser, the CEO, had sent to her own staff saying, I know many of you share my frustration that we are seriously underestimated as a bank. No one else has our global lens nor breadth of our insights and on-the-ground capabilities. Now, what does that mean? While they try to capture share, they are eliminating regional leadership roles. That means across the world.
Now, Bosick says it's the biggest restructuring for the Wall Street giant in about 2 decades. Shares of Citi right now, they are up about more than 1.5%. And Blackstone is making some changes of its own. The private equity giant is consolidating groups that invest in corporate credit asset-based finance, as well as a business that manages money for insurers, all under one chain of command. Now, the combined unit will oversee almost $300 billion of assets, with a goal to grow credit assets to $1 trillion within a decade. Shares of Blackstone right now up about just a fraction. I'm Lisa Mateo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ holding on to gains. CPI Wednesday and the S&P now up by 14 points to 44.76, a gain of 0.3%. Again, close to session highs. The Dow up 77, now up 0.2%. The NASDAQ Composite Index up by 69 points. That is a gain of 0.5%. 10-year yield 4.28%, with a 2-year right now at 4.98%. Spot gold down $3 the ounce to $19.10, down 0.2%. West Texas Intermediate crude up 0.1%, $88.95 a barrel on WTI. So we've got the Dow, the S&P, and NASDAQ all gaining after a mixed inflation report this morning. Reinforced speculation that the Fed will pause its rate hikes, but refrain from calling the end of its tightening cycle. What about growth forecasts and the outlook for a U.S. recession? Jeffrey Cleveland is chief economist at Payden & Regal, and he was a guest moments ago right here on Bloomberg Markets.
It's possible the U.S. grows somewhere between, I would say, 3 to 4% at an annualized rate during the current quarter, which is awesome, above trend. We don't have a contraction in our forecast out through the middle of next year, so we think we will avoid a recession, and the economy will continue to grow.
And you can hear more of the conversation with Jeffrey Cleveland on the Tape podcast. You can download it wherever you get your podcasts. Amazon making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. Recapping stocks higher, S&P up 14, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We are also streaming live on YouTube, so go to youtube.com and search Bloomberg Radio. Well, a lot of folks, I think, probably came up in the business kind of thinking about that 60-40 portfolios being kind of ideal, stocks and bonds, but a lot of folks, been over the last decade plus have been saying, hey, you can juice returns if you go with alternatives, put that into your mix somewhere, maybe 10% or something like that. But one of the risks alternatives is the lower liquidity and sometimes illiquidity. Our next guest tries to address that issue. Brian King, he's the CEO of Lotus Markets. He joins us here in our Bloomberg Interactive Broker Studio. Brian, welcome. Talk to us about Lotus Markets. What do you guys do there? What are you trying? What market demand are you trying to meet?
Yeah, thank you so much for having me. We are essentially a stock exchange for alternative investments. We're actually registered as an ATS, which functions a lot like a stock exchange. But to the point that you just made, most alternative investments are largely illiquid. And we're seeing this massive shift of where most alternative investments have historically been invested in by major institutions, and the pendulum is moving more to individual investors. And the closer you get to a true retail investor, the more important liquidity becomes. And so that's really what we're doing, is we're allowing the opportunity to match buyers and sellers of these illiquid assets.
All right, so how was it done before? Like, could I just not get liquidity in the past, or how does this work? Give me an example of maybe a trade or the types of trades you guys facilitate.
Yeah, so we started our market in the registered fund business. So they're registered, filing Ks and Qs, but they aren't listed on an exchange. In many cases, these funds were completely illiquid, so you couldn't have a liquidity event until the fund decided that there was one. In some cases, maybe you could pledge your shares into a redemption queue, and then they would buy back your shares. But for the most part, though, if you had like an urgent need for liquidity, you would call up a broker. The broker would try to find the other side of the trade. They'd give you a dramatically deep discount of 50, 60%, and you would pay a 10% commission to do that.
So you get ripped off.
Yes, your face is literally ripped off.
And and that's part of what drove you to create this, right? Because
exactly.
What happened? Did you get ripped off before, or you didn't want to get ripped off when you needed liquidity, or what happened?
Yeah, so I do have some very specific experiences in my past, not me directly, but family members and others that were kind of locked up into alternative investments. And so for them, situations, specifically during the financial crisis. They were looking to get out. They wanted to be able to get in front of it, and ultimately some of these funds went completely belly up. And so, you live with those moments, and you see that type of a situation occur, and you want to be able to say there's got to be a solution for it.
Okay, so if you facilitate a trade on your exchange, how do you get paid? What's kind of your business model?
So we right now the sponsor doesn't get charged anything, the buyer doesn't get charged anything, but we do charge the seller a 3% commission. So it's not nothing, but these are illiquid. So that's the charge that we typically take. It's 2.9%.
And how do you find the buyer? How do you find the other side? You have relationships with people that buy and sell these types of investments?
Yeah, there's a lot of natural buyers of alternative investments. You can think of a lot of institutions like insurance companies, hedge funds,
What's a
private
transaction
equity.
size for you?
So it can range. So it can be all the way. We're an ATS. It's actually approved.
What's an ATS?
Sorry, ATS is an alternative trading system. Okay. So if you think, so my background, I was part of BATS as a startup company. BATS was an ATS before it became an exchange. It functions a lot like a stock exchange, but isn't regulated in the same way. It's a little bit different.
And this is how you have a lot of experience at BATS, at NYSE, and
That's right.
This is how you not only know how to find buyers and sellers, but how to put the infrastructure together, because that, I have to guess, is also an important part of it.
That's exactly right. So we're a technology company at our core. So you build the technology, you build the framework. We're highly regulated both by FINRA and the SEC. And so there is a lot that goes into it. But yeah, my background comes in helping to match buyers and sellers and finding those institutions. And then we also have a lot of RIAs and family offices that say, hey, we've already invested some of our clients' money in this, and so we would be, in many cases, wanting to buy more of it. And if you could buy it at a discount, that's even better.
So, I've read you're the third biggest ATS in the country, and you've got some big players on your platform. Let's just look into the list: Blackstone, Starwood, Deutsche Bank funds. How big is the platform if you put all those assets together?
Yeah, so I think if you added up all the assets that are on the platform, it'd be around 200 billion that we're trading today. But we made an announcement a week ago. So again, I talked about the registered funds is where we started, but we just launched our first private real estate fund group. Walton Global is now listed on our marketplace. We had 4 different large transactions in that, but that was our first foray into private real estate. Private real estate is a $14 trillion marketplace, so it's a wide addressable market.
But what do you mean by private real estate? It's not like the Sweeney Ranch on the Jersey Shore. What are you talking about?
Yeah, so a lot of times you have sponsors that put together private real estate deals. They raise capital from large investors. Typically, you have to be accredited to invest in those types of investments. And so they put those deals together, and typically you have to wait for the sponsor to have a liquidity event before you yourself can find one. So we're now starting to work with sponsors to help them find liquidity for their shareholders that want it early.
All right, if I were a shareholder in one of those things, and I'm looking around Manhattan, I need to get out of this thing, because I think when XYZ building on 3rd Avenue trades, it's going to trade at 50 cents on the dollar. So you're getting into a marketplace that is going to have incredible volatility, I would say, over the next 5 to 10 years. Is that how you view it?
Yeah, I do agree that there are some segments of commercial real estate that are going to be very volatile. There definitely, if you're looking at New York, you're looking at San Francisco, those places when you're looking at commercial real estate, office buildings, they're really in a tough spot. I think the biggest thing that they have right now is the financing, right? The sponsors themselves trying to find the ability to refinance those deals is going to be really challenging.
But not a lot of volatility if you're looking in the Columbus, Ohio metropolitan area. Of
course.
Looking at student housing, looking at medical offices, looking at movie theaters.
Multifamily.
They're going to be okay.
Yeah, multifamily is having some real success though too as well.
Yeah, exactly. All right, who do you compete against?
There aren't many direct competitors. NASDAQ has a private funds division that they're successful, but we don't compete head to head right now. The things that they do, we don't, and most of the things that we do, they don't. So there's So it's just now people starting to move into this space. So it's a great opportunity, right, to be kind of the first to do it.
Now, do you put up capital to facilitate these trades, or are you just simply a broker?
We're agents. We're agency, yeah. So
Okay.
we're not buyers or sellers of the asset. We're matching.
And again,
buyers
an
and
average
sellers.
transaction size for you, on average?
Let's say $100,000 to $500,000.
Okay.
Is probably the average, and the more private it gets, the larger the size of the transaction.
And how many trades do you do a day or something like that?
It varies because it's an illiquid market. It varies. You could have a couple a day, or you could have 20 a day. But it's
How long does it take you to kind of execute a trade? I mean, it's not like me back at Payne Weber pushing my button for Alliance and I'm dumping my 400,000 shares of XYZ stock into Alliance.
Yeah, so it's actually we've set our marketplace up in a very traditional way.
All right, thanks so much for joining us. Right now, we're just going to go to Washington, D.C. Elon Musk is now speaking outside of the Senate building.
While our regulatory agencies are not perfect, and I deal with regulators on a very frequent basis, with the automotive, communications, Starlink, and then
so
FAA
it's
with rockets. So
no, we're actually based in Kansas City.
Tremendous amount of interaction with regulators for a couple decades at least, and while regulators are not perfect, there's no regulatory agency that I'm aware of that I think we should, at the federal level at least, that we should delete.
Yeah. Do you think there should be a department of AI or something like that?
Yeah, I don't know what exactly. Perhaps a department of AI. I think the probability of there being some sort of AI regulatory agency that stands on its own, similar to the FAA or FCC, is likely at some point.
You think so?
I think so. Now, the reason that I've been such an advocate for AI safety in advance of sort of anything terrible happening is that I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive. In the past, if you take, say, and I'm being somewhat late for, speaking of regulators, I'm a little late for the FAA. I'm meeting with the FAA.
We don't want to hold you up.
Sure, but if you take the example of say, seatbelts. Seatbelts were opposed by the auto industry for a very long time, even though the data was very clear that they're safe, that they radically improve deaths and injuries. So, we don't want to be in that situation where we're fighting regulations, even though there's a safety thing. We can't wait for millions of people to die in auto accidents. And it's important to just elevate the question here. The question is really one of civilizational risk. So it's not like one group versus another, one group of humans versus another. It's like, hey, this is something that's potentially risky for all humans everywhere. Very important to understand that.
Is there an equivalent?
And I gotta go.
Do you think that Congress is sufficiently ready to regulate AI?
No, not yet. No, the sequence of events will not be jumping in at the deep end and making rules, but it starts with insight. In fact, this is actually how all of the regulatory bodies have been formed, I believe. Is you start with a group formed to create insight, to understand the situation. Then you have proposed rulemaking. You'll get some objections from industry or whatever. And then ultimately you get sort of a consensus on rulemaking. That rulemaking then becomes law or regulation.
What's the difference between ordinary versus
I saw very little disagreement, actually.
Thank you, Elon.
Down in Washington, D.C., coming out of that meeting with the senators on AI, and I guess the question for a lot of folks is, how do you regulate AI? How should it be regulated? It's early innings, but still, you got to, I think, get a sense of where we go.
Right. So just to be clear, Elon Musk was there in Washington, D.C., speaking to a group of U.S. senators in a closed-door session. Correct. So we don't know what happened in that room, but according to a person familiar, and I think you're going to see a lot of reports coming out of this because it wasn't like a terribly confidential thing, Elon Musk said that artificial intelligence is a double-edged sword, saying you know, the technology can be a tremendous source for good. Obviously, he wants to use it. His Dojo supercomputer it collects a lot of data and tries to help his company Tesla put artificial intelligence to work in autonomous driving. But he also has long been warning about the risks to civilization. So, you know, these aren't really new statements from Elon Musk. He's been saying both of those things for a long time. But I think the interesting thing is that now you have him telling this to senators, along with a number of other really important executives in the artificial intelligence industry. And, you know, if nothing else, at least he's educating these people because they need it.
They need it. And that was kind of the goal or the agenda today, was simply to bring a lot of these tech executives in and talk about AI and what it means to a group of leading senators to kind of begin that education process.
Well, we were talking earlier with an investor from Alger, right? Yep. She was telling us the key thing is data centers. There aren't enough of them, and they don't have enough electricity to run these large language models. And Musk was saying he is concerned about data centers, but his concern is that data centers are too powerful. They have too much power. And he says they're so big they can be seen from space, and they have a level of intelligence that's currently hard to comprehend. So he has played up this kind of boogeyman of AI maybe taking on humanity, a la the Terminator.
The Terminator. All right. Well, could be a lot more reporting coming out of this meeting today, I'm sure. Right now, let's get a check world and national news with Nancy Lyons.
Thanks, Paul. Pennsylvania Governor Josh Shapiro says the nearly 2-week search for escaped killer Danilo Cavalcante is now over. He was recaptured this morning with no shots fired.
Thank God there were no injuries to law enforcement or to the public. We obviously became deeply concerned after the suspect was able to steal a weapon.
Shapiro says Cavalcante was captured shortly after 8 a.m. Eastern Time. He was found hiding in a large pile of logs behind a John Deere store in South Coventry Township, which is about 30 miles from the prison where he escaped. A law enforcement aircraft using thermal imaging picked up a heat source in the area just after midnight, but storms forced that aircraft to land. That's when officers were sent in to surround the area until they could move in this morning. It's unclear if a deal between the big three automakers and their auto workers can be reached before tomorrow's midnight deadline. United Auto Workers President Sean Fain.
Unfortunately, they've waited till the last week to get serious about bargaining, so we got a lot of work to do in the next 48 hours.
Fain says the workers will strike against any company that's not reached a deal by the deadline. Those familiar with the talks say the union has dialed back its original demand for a 40% raise over 4 years to now the mid-30s. Ford and GM started out offering raises of 9 to 10% over 4 years, with Stellantis then boosting that to 14.5%. Fain will outline the strike strategy this afternoon. The opening week of the 2023 NFL season was capped off by the most watched Monday night football game in ESPN history. The matchup between the New York Jets and Buffalo Bills at MetLife Stadium was watched by more than 22 million viewers. The previous record was set during a 2009 game between the Minnesota Vikings and Green Bay Packers, when quarterback Brett Favre made his return to Lambeau Field. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now to Charlie Pellet for a business flash.
Thank you very much, Nancy Lyons. Stocks higher across the board. You mentioned the auto industry strike negotiations. For the most part, we've got auto stocks higher right now. Case in point, Ford up by 2.7%, GM up by 1.3%, Stellantis, it is little change right now, down less than 0.1%. Stocks, bonds, and the dollar seeing moves today with a mixed inflation report reinforcing speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. S&P up 9. That is a gain of 0.2%. The Dow up 22, now up by 0.1%. NASDAQ up 59, up 0.4%. The NASDAQ 100 index, full of big tech names, doing a little bit better, up now by just about 0.5%. 10-year yield of 4.24% with a 2-year that's yielding 4.97%. Spot gold down $1 the ounce to $19.10, a decline there of 0.2%. And West Texas Intermediate crude down 0.5%, 88.45 a barrel. So again, recapping, stocks are higher. S&P right now up by just about 9 points, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet. Thank you very much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're also live streaming now. Head over to youtube.com and search Bloomberg Radio. We've been talking a lot about AI, and for good reason. We've got, as we just heard from Elon Musk, and a lot of other tech leaders, CEO types, down in Washington, D.C., meeting with a select group of senators talking about AI, kind of an education process, if you will. So, AI overnight has become the front and center for global Wall Street and global regulators as well. We want to continue that conversation today with Ashley Still, Senior Vice President and General Manager for Creative Cloud and Document Cloud at Adobe. Ashley, thanks so much for joining us here. Again, a lot of attention on AI now today down in Washington, D.C. Some of the regulators and some of the politicians down there trying to get a little bit educated by some of the tech leaders. How do you folks at Adobe approach AI in your business?
Well, first, Paul, thank you so much for having me. It's great to be with you today. And as you said, AI just has huge power to enable many things. And at Adobe, what we're really focused on is how AI can accelerate creativity. We believe every human is creative. Everybody has a story to tell. And we're using AI to enable anyone to create content and to share their story. The way that we do that is through Adobe Firefly, which is our family of creative generative AI models. And we announced today that Firefly is now generally available after a very successful beta. It's available both as a standalone web application, so anyone that has access to a browser and can type in a simple text prompt can create content. But it's also now built into the fabric of our incredibly powerful creative tools like Photoshop and Illustrator, so that professional creators and designers can use AI to add expressiveness and bring their ideas to life in even richer ways.
And actually, one of the early concerns of AI and its applications, we're seeing it play out in Hollywood a little bit. A lot of the writers are concerned about AI. They're concerned about a number of things, but one of them is AI. How do you think about just how the protections around the content that can be created through AI, how do you expect that to evolve? Does Adobe have a point of view on that?
Absolutely. So first, we've been really thoughtful about how we even train our models. And there are different approaches out there with different AI services. The approach that we take is we only train our models on content that we have licensed to, as well as content that has an open license on the internet. And this is different than going out and kind of scraping the internet, which has a lot of implications for artists' rights and their protections, right? So obviously, Adobe, we are very passionate about our role in advancing creativity and being a part of the creative community. And it really starts with how we're going about training our models. It doesn't stop there. We build those protections into our services, right? So, for example, artist style is something that is very concerning right now to the creative community, and you referenced Hollywood. People spend, a decade or more developing their style, whether they're in Hollywood, whether they're in advertising, whatever it might be. And there's real concern about AI's ability to transfer that style instantaneously. We build that protection into our products, and we also are supporting regulation to protect artist style as well.
So what, at Adobe and Firefly, give us some examples of kind of how your technology is used, and maybe who uses it and what do they use it for?
So we are building Firefly across our family of applications, and our mission at Adobe is creativity for all. We have applications that anyone can use. Again, I referenced firefly.adobe.com. That's a new web application that is a playground for anyone that wants to explore creative expression using AI. All you need is a browser and the ability to write simple text prompts, and you can create images, you can create text effects, and really anyone can use that. But we also have Adobe Express, which is an all-in-one creativity application where you can create text to image as well as text effects, create posters, flyers, social media posts. Again, so people that want to generate content easily can use Adobe Express. And as I mentioned before, we are really deeply building AI into our professional workflows across Photoshop, Illustrator, and more applications will be coming soon. What this does for our creative professional community is increase the value of our applications. It enables them to ideate faster and be more productive.
And who's a typical user of your products? Is it, I mean, like how much of your customers are they individuals versus corporate, that kind of thing? Who's a typical user, and how do you think that'll evolve?
It ranges, right? We're very fortunate that we have an incredibly broad customer base. Whether it's students, our products are used in K-12 schools, of course, creative professionals. And creative professionals, they often work for themselves or they can work for the largest companies in the world. And what we're really seeing across the board is whether you're a consumer or whether you're a professional, the demand to create content, to tell your story is continuing to explode. Every business is a digital business, and they need content to power how they're engaging with customers across channels, whether it's TikTok or YouTube or their own website. And certainly from a consumer standpoint, I mean, I just look at my own kids. They create content all the time. And it's to make people laugh. It's to express an idea, whether it's with friends or at school. And so we serve all of those needs. And what's incredibly exciting about Firefly and AI, it's enabling us to serve all of those needs in unique and new ways. And so it really expands the tent of who can create.
So what's the next step, do you think? What's the next new thing you guys are working on at Adobe as it relates to AI?
Absolutely. So we continue to advance our core models, and it's still early days, right, in the era of generative AI. And so the quality, the breadth, and the depth of those models continues to evolve. And that just gives us the ability to bring rich capabilities across all of our applications. We also are working on new media, right? So we're doing great research in video and 3D, and how, again, we bring the power of AI to all of the types of media that people create through our applications. So stay tuned for more on those.
All right, Ashley, thank you so much for joining us. Really appreciate it. Fascinating stuff. Ever-changing, that's for sure. Ashley Still. She's a Senior Vice President and General Manager at the Creative Cloud and Document Cloud business over there at our good friends at Adobe. So interesting stuff there. And again, AI kind of hitting pretty much every part of the economy, it seems like, when you listen to some of the use cases. But certainly when it comes to content creation, that's where the opportunities are, and that's where, for a lot of people, the potential risks are. And we're seeing that, again, play out with the Hollywood writers. One of the things they're looking at is maybe some protections from AI impacting their business and getting credit for what they actually create. So keep an eye on that. S&P 500 up 0.25%. This is Bloomberg. Let's get some company news right now. Lisa Mateo.
Thanks, Paul. The number 2 wireless carrier is looking to expand its service. Bloomberg's Gina Cervetti explains how.
T-Mobile says it will be able to expand more service to parts of Orlando, New York City, Kansas City, Missouri, and other cities now that it's buying some airwaves from Comcast. The band of airwaves involved can cover larger territories and pass through walls and windows more easily than higher frequencies.
Shares of T-Mobile right now, they're up about 1%. China is finally acknowledging reports about iPhone bans. Bloomberg's Ed Ledlow has more.
What is really important with this story is that the spokesperson, Mao Ning, went on to say that China has not issued laws and regulations to ban the purchase of Apple or foreign brand phones. And actually, if you look across the media landscape this morning, many outlets leading on that there is not, according to this spokesperson, an outright ban.
Now, that spokesperson also added that the government does attach great importance to security, and all companies operating in China need to abide by its regulations. Shares of Apple right now, they're down about 0.5%. Meanwhile, a government watchdog agency in France has ordered Apple to pull the iPhone 12 from the French market. The National Frequency Agency, it says it emits levels of electromagnetic radiation that are just too high. It's asking Apple to fix the issue, otherwise the tech giant will have to recall phones that were already sold. Apple says its device complies with the regulations governing radiation. Those are the company stories we're following this hour. We'll have more Bloomberg Markets in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All
right, Matt Millen, Paul Sweeney here in the Bloomberg Interactive Broker Studio, looking at these markets at the moment. S&P 500 up 1/3%. Looking at NASDAQ a little bit better, up about 0.5% on the yield front. A little bit of a pullback in the yield here. We have the 10-year Treasury about 4.25% off about 3 basis points. The 2-year is 4.9%. We were at 5% just earlier in the session, so a little bit of a pullback there. Looking at crude oil, WTI crude oil off just a smidge here, $88.76 for WTI crude oil, so still at elevated levels. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Nancy Lyons.
Thanks, Paul. Escaped Pennsylvania convict Danilo Cavalcante is back in custody. He was captured today by Chester County authorities, ending a nearly 2-week manhunt. Lieutenant Colonel George Bivens with State Police says Cavalcante was found in a pile of logs behind a John Deere store and tried to crawl away from police.
One of the Customs and Border Control teams, BORTAC, had a dog with them. They released the dog. Some of our PSP CERT members were also there, had him surrounded. The dog subdued him, and team members from both of those teams immediately moved in.
Bevins says no officers were injured in the arrest, but Cavalcante did sustain some bite wounds from the dog. Back from the G20 and a focus on geopolitics, President Biden plans to turn his attention to his re-election and a fundraising blitz for the rest of the month. We got more from Bloomberg Government's Jonathan Tamari in Washington.
There's been a lot of concern from Democrats recently about polls showing a really tight race again in 2024, and is he up for the job? And I think this is a way of them trying to say, look how strong he is, both politically in terms of fundraising and maybe just in terms of his ability to be active and out on the campaign trail as well.
Again, Bloomberg Government's Jonathan Tamari. The death toll is now more than 5,000 from the massive flooding in eastern Libya. Thousands more are still missing. Bloomberg's Tariq El-Tablawi is following this from Cairo.
I think the biggest challenge for Libya, and according to the Prime Minister in the West, Prime Minister Dabiba, is that they don't necessarily need food or medicine. What they need are skilled personnel that can actually help dig through the rubble and try to minimize what's obviously a devastating death toll and poised to rise further.
Bloomberg's El-Tablawi says the hardest hit areas suffered from years of infrastructure neglect. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy, thank you so much. We appreciate that. Well, here's a story that got my attention as a former media and cable television analyst. Charter Communications, that's the second largest cable company out there. The chief financial officer, Jessica Fisher, described the recent contract renewal with Walt Disney Company as a victory for pay TV providers. Under the agreement announced on September 11th, Charter will offer the Disney Plus and ESPN Plus streaming services at no additional cost to subscribers. Charter will pay Disney a wholesale rate for Disney Plus and get ESPN Plus for free. The nation's second largest cable TV provider also will drop a number of Disney channels it didn't want to pay for, including Freeform and Disney Junior. In exchange, Disney gets higher fees for channels such as ABC and FX and a commitment by Charter to provide ESPN to at least 85% of its customers. Fisher, speaking at an investor conference in New York on Wednesday, said the two companies, quote, pulled together a package that we think can stabilize the pay TV industry. We can offer packages to consumers that both fit their preference and their budget, Fisher said. Cable and TV providers have been losing customers to streaming services such as Netflix. Charter executives argued the media companies needed to offer both streaming and traditional channels. Quote, you could move to a new transformational model without ESPN, Fisher said. We were willing to accept their sort of market rate increases, but it was really because we knew they had the linchpin asset and we needed them to be a first mover to get us into this transformational model. Looking at the markets right here, S&P 500 up 1/3%, NASDAQ doing a little bit better, up 0.5%. The VIX, it's down 5.5%. We're now 13.45. I called that out for Tom Keene. As always, yields coming in just slightly. 10-year Treasury, 4.25%. Sound On with Joe Matthew from Washington, D.C. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Kevin McCarthy says it's Nancy Pelosi's fault. Welcome to the fastest show in politics, as the Speaker of the House defends his decision to launch an impeachment inquiry into President Joe Biden by blaming Nancy Pelosi's decision to do the same years ago. We're going to have the latest from Capitol Hill now that House members are back. The rhetoric is getting louder, and we'll have a conversation here at the table with Stephanie Murphy, the former Democratic Congresswoman from Florida who served on the January 6th committee. Later, the White House responds to the impeachment inquiry, even as the bickering inside the Republican-led House gets louder. We're going to talk all this out with our signature panel back together today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano. So let's get started, as always, with a look at Wall Street. Here's Charlie Pellet. Charlie?
It is CPI Wednesday with the Dow, the S&P, and NASDAQ all advancing 15-point gain right now on the S&P at 44.77, higher by about 0.3%. We've got the Dow up 56, up now by just about 0.2%. NASDAQ up 77, a gain there of 0.6%. 10-year yield 4.24% with the 2-year now at 4.97%. Spot gold down $4 the ounce, still above 1900, 1909 on gold, down by 0.2%. A retreat for West Texas. Intermediate crude down 0.2% right now. WTI 88.70 a barrel. Brent 92 even now, down by about 0.1%. Hotter than expected inflation likely ensures the Federal Reserve keeps its options open to raise interest rates again in November or December, following an expected pause this month. The so-called Core Consumer Price Index, which excludes food and energy costs, advanced 0.3%. Katerina Simonetti is Senior Vice President for Private Wealth at Morgan Stanley.
You know, on one side, we see inflation coming down, but we also see parts of it that are still up, which is very concerning to consumers, like energy, real estate prices, rents, the services, travel. And this is very typical of the late cycle where we see this conflicting data.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. American Airlines shares, they're down now by 4%. American is slashing its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. Frontier Air Group Holdings and Spirit Airlines, two deep fare discount carriers, also said the 34% surge in fuel will hurt their quarterly results as well. Shares of Frontier down now by 8.5%, and Spirit, which uses the ticker SAVE, S-A-V-E, down by 2.4%. Again, recapping, stocks higher across the board. 12-point jump right now for the S&P, up by 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you, and welcome to the Wednesday edition of Bloomberg Sound On. I had to actually think about it for a minute because it seems like it's been a week already. With so much happening every day, now that lawmakers are back, we start with the matter of impeachment. That's been all the talk this morning as Kevin McCarthy emerged once again to defend his decision to, as we told you around this time yesterday, launch an impeachment inquiry into President Biden. It's not only questions about where is the evidence, whether this is appropriate right now, how it's going to be done, but also without a vote. This is something that, of course, Speaker McCarthy criticized Nancy Pelosi for heavily back in 2014 when she did the very same thing, and he tried to explain his rationale earlier today. Let's listen.
Nancy Pelosi changed the president of this House. This doesn't preclude from a... Nancy Pelosi changed the president of this House on September 24th. It was withheld and good enough for every single Democrat here. It was good enough for the judge. Why would it have to be different today?
Okay, September 24th. This is exactly what he said on that day back in 2019.
Our job is to legislate. not to continue to investigate something in the back when you cannot find any reason to impeach this president. She cannot unilaterally decide we're in an impeachment inquiry.
So it's kind of hard to rationalize these two at the moment. Then there's the question of evidence. James Comer and other leaders in the Republican Party held forth earlier today in a briefing to try to make the point that they had the goods, though it's been difficult to connect the dots here, and they will be holding a hearing, according to Comer. Remember, he chairs the Oversight Committee this month.
We plan on having a hearing in September that will kind of evaluate some of the things that we believe have happened from the Biden family that are in violation with our laws. So what I said in January holds true to today. We are following the money, and we will see where that leads us.
Following the money, and not every Republican believes that there is a case here. Ken Buck remains a thorn in everyone's side on all this. The Republicans spoke about it on CNN.
I have not seen any evidence that links President Biden to Hunter Biden's activities at this point. I will be getting a briefing later in the week. I'm looking forward to understanding more of what the Oversight Committee has uncovered. But at this point, I have not seen that evidence.
All the while, Elise Stefanik called it the biggest corruption scandal, she thinks, in the history of the nation. This is where we begin. Of all places, with Stephanie Murphy. I didn't think this is what we'd be talking about today. The former Congresswoman from Florida is with us. Of course, former member of the January 6th committee. It's great to have you back in Washington and at the table here. Thanks for joining us on Sound On. This is not the only issue I want to talk to you about, but you, of course, served through the two impeachments of Donald Trump. You remember that day back in September of 2019 when Speaker McCarthy laid out that rationale. Does Nancy Pelosi deserve the blame for this?
You know, I think we should all brace ourselves for a lot of hypocrisy in the days coming forward, where positions were held when the other side was using techniques that they now employ today and aren't critical of that. And I think the impeachment inquiry without a vote is one situation. McCarthy clearly is doing it because he doesn't have the votes to take it to the floor to get it passed. It's a 4-vote margin for him. And so this is a way for him to theoretically protect his vulnerable members, the 18 who are in Biden-won districts. But once you open this impeachment can of worms, you're not going to be able to put it back. And inevitably, this is likely to lead to an impeachment, and he won't be able to protect his members from that vote. And so it's just an interesting play to see how it'll play out.
Well, that's the truth. I mean, in an election year, he's going to put at least 18 people in the line of fire because of that vote, to your point, right? Republicans who won in Biden districts, if we can call them that, could be in great peril.
Yeah, and I think those Republicans are more moderate Republicans. They want to be focused on the economy. That is actually a political point that they could win on, because the American people, based on the polling, are pretty unhappy with the Biden administration on its handling of the economy. And they want to be talking about the economy, where the Republicans have a strength. And instead, all of the air in the room is going to be sucked out by the impeachment proceedings.
Well, so let's try to read between the lines here a little bit. You know how this body works more than most people. It's been suggested that this might actually help keep the government open, that members of the Freedom Caucus wouldn't vote for a continuing resolution, although from what I'm hearing, they still won't, unless they got the impeachment inquiry. Marjorie Taylor Greene wanted to connect the two at one point. It's been suggested that the Speaker's concerned about a motion to vacate. He might get fired if he doesn't launch an impeachment inquiry. Is it all of the above?
You know, this Congress, it really has seemed that Speaker McCarthy is playing by live to fight another day. So he handles each crisis in that moment, buys himself some space, hoping that the dynamics change by the time the next decision has to be made, right? And so, you know, they should be focused on funding the government, but, you know, they've decided to open this impeachment inquiry. Does it change some dynamics in his caucus? Maybe. But when you don't link two things legislatively, there's no guarantee that you've bought anybody's vote for it. You know, like, because he did this doesn't mean that the far right is suddenly going to support funding the government.
Sure, yeah. You know what it's like to investigate something. In fact, it was, I believe, the largest investigation in the history of the Congress, the January 6th committee. We're about to see the Oversight Committee, Ways and Means, and Judiciary embark upon this. The Department of Justice is already, of course, investigating Hunter Biden. There's a special counsel there. Can they match the work of the DOJ? What's about to happen internally with an investigation like this launching?
Well, I also served on the Ways and Means Committee, where we use Section 6103 to get the former president's tax records, which I expect to see the Ways and Means Committee do this time as well. But I think there are limits to the investigative ability of Congress, because a lot of folks, when we asked them to appear before January 6th, chose not to. Although with Peter Navarro being convicted of contempt of Congress, maybe that changes people's minds and they'll be more willing to cooperate. With DOJ, when they issue, it's not a request, and they have the full force of the law behind them and are able to secure information and testimony in a way that we didn't always see with Congress.
Did you hear from the special counsel as a committee member? To what extent was there ever cooperation, or was that a black box for you across the street? You didn't know what was happening inside the DOJ?
It was a black box, and at times very frustratingly a black box, because initially they were just prosecuting the low-level participants in the January 6th insurrection. And so as a member of the January 6th Select Committee, I wondered, when are they going to get to the people who masterminded all of this?
Yeah. To that end, and I want to ask you more about shutdown politics here, because you can probably shed some light on what's about to happen. But what went through your head when you saw the list of the indictments roll out in Georgia, followed on that unsealed recommendation by the special grand jury that brought in names like Rudy Giuliani, Michael Flynn? You must have had flashbacks from your own investigation.
I wasn't surprised to see those folks named, but I want to remind the American people that it wasn't a prosecutor who did this. This was a grand jury of American citizens, average Americans who did their jury duty, who saw the evidence presented to them and thought that there was, enough evidence to move forward, and they're the ones that handed down that indictment.
Should Rudy Giuliani have been included in those indicted?
I always let the legal system make the decisions that they think they can support beyond a reasonable doubt. And you never know who's cooperating in the background and what kinds of inside deals are going on there.
How true. As we spend some time with Stephanie Murphy, the former Congresswoman from Florida, if you were still in the building, what would you be preparing for here? It looks like there might be a stopgap solution. Budget talks, though, seem to be off the rails unless something major changes here, not only between the House and the Senate, but between Republicans in the House. Democrats don't have a lot of power over what's about to happen, right? Do you think that we'll avoid a shutdown?
It looks like we're barreling headlong into a shutdown, and I think if I were still a member, I'd be preparing for some long nights and maybe weekends in Washington as shutdowns happen. They usually try to time the shutdown for like a Friday and then use the weekend to negotiate through it so that the impact is muted on the federal government and federal workers, and hopefully by Monday morning you have a solution. But we are dealing with people who don't believe in government. The far right, a shutdown isn't a bad thing for them. That's actually what some
members are calling for.
So I think this could be a protracted standoff.
Goldman Sachs says 2 to 3 weeks for a possible shutdown. Is that real in your view?
Because they have defanged the shutdown, so it isn't, it's not mitigated, not a total shutdown. It allows shutdowns to drag on for a little bit longer. And so I think buckle up, this fall is going to be an interesting one.
Well, it's an interesting world we're in when we consider depriving members of the military their paychecks, and I realize those would be restored after the fact, but that's happening at the same time as a lone senator from Alabama conducts this blockade on military promotions. Senator Tommy Tuberville, in fact, joined us yesterday here on Bloomberg, on Balance of Power, on Bloomberg TV. I asked him about readiness. You used to work for the Department of Defense, and you have a sense of what we're talking about here more than those of us who have not served. Here's what the senator said, and I'll be curious to have you respond.
They have no clue of what this policy is. They just wanted to change it to let the American people know, hey, we can do what we want to, and I'm not going to allow them to do it. Now, if they continue to do it, we're going to have the same people in place as admirals and generals. Again, there's no readiness problem. We got people in place that are doing their jobs.
His point is that if this continues, and by the way, we're at 9 months or something at this point, military families in temporary housing, waiting for confirmations. We don't know when. But he says, hey, we've already got good generals and officers in place. What's the difference if they hang on a little longer? How does this impact readiness in your view, or doesn't it?
I think it impacts not only readiness, but morale and leadership within the Department of Defense and within the military broadly. And it's actually really ironic that the party who wraps itself in the flag and in the military is the one that is harming military families and the U.S. military's readiness at a time when our adversaries are challenging our leadership in the world. Mm-hmm. You know, one of the first areas that gets cut is training, and that goes directly to readiness. We don't let our pilots, fly. They don't use live ammunitions in training. Those are ways in which the military can reduce its spending, and it goes right to the readiness piece. But on the leadership piece, the Joint Chief of Staff, he has a deadline where he cannot continue to serve. Right. And so we're going to let our military go without a military leader because one senator wants to be obstructionist?
We're going to speak a little bit later in the broadcast with Michael McCaul, one of your former Republican colleagues, chairs the House Foreign Affairs Committee. He called this paralyzing to our military. Is it going to take more Republicans like Michael McCaul to bring this to an end? What's the off-ramp here for Tommy Tuberville?
I think the Senate Republicans own this one, and Mike's a great guy, and I'm glad to hear him using his voice. He's reasonable. He understands the debilitating nature of what is happening, and he cares about the military and the families, and so I'm glad to hear him speaking out. But Senate Republicans need to make life very uncomfortable for the senator who's holding up all of these confirmations.
Mm-hmm. Should the White House or should the administration threaten federal funding for programs in Alabama? How do you make them uncomfortable?
Well, I don't think that we should weaponize government because you're just really punishing people who live in Alabama if you were to threaten that. But, his Senate colleagues need to put pressure on him, find out what it is that he needs, and give him half of that, half of the loaf, and then move on. But this is playing with our national security, and it's hurting the very people who have stepped up and decided to serve this country.
Well, one thing we know is he's not getting Space Command in Alabama. Maybe that's the beginning of the pressure, right? I'm so glad you could come to see us. Whenever you're in Washington, I hope you will do that very thing. Stephanie Murphy, thanks for talking with us, as always.
Great to be
here
with
on
you.
Bloomberg Radio. And on YouTube, I'm Joe Matthew in Washington. Thanks again to the former Congresswoman and a fascinating conversation that we'll bring to our panel next. Rick Davis and Gidi Shanzano, only here on Sound On. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long at Bloomberg. Stocks are holding close to session highs. Right now, the S&P 500 index is up 14 points, up by about 0.3%. The Dow up 32 now, up 0.1%. NASDAQ up 80 points, higher by 0.6%. Bitcoin up 1%, 26,335 now on Bitcoin. 10-year yield 4.23% with a 2-year that's yielding 4.96%. Spot gold down $3 the ounce to $19.10, a decline there of 0.2%. And West Texas Intermediate crude oil 88.44 a barrel, lower now by 0.5%. Most mega caps are gaining, with the chiefs of 5 of the 10 biggest U.S. companies appearing at a closed-door Senate meeting to shape how artificial intelligence is regulated. We've got the Dow, the S&P, and NASDAQ all higher. We did also have a mixed inflation report this morning, but that reinforced speculation that the Fed will pause its rate hikes but refrain from calling the end of its tightening cycle. Again, the 10-year 4.24%, S&P up 14, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The headline on the terminal: Republicans kick off Biden impeachment push on uncertain ground. It gets to the fact that the votes, well, they may not be there, and that's maybe why Speaker McCarthy is launching an impeachment inquiry into Joe Biden without calling a vote, knowing that he demonized Nancy Pelosi for doing the very same thing back in 2014. And here we are again. I guess that was 2019, forgive me. The 24th of September, as he reminded us today, and this is what he said at that moment.
Our job is to legislate, not to continue to investigate something in the back when you cannot find any reason to impeach this president. She cannot unilaterally decide we're in an impeachment inquiry.
But there could be some other issues here. The call is coming from inside the House. Look no further than Matt Gaetz, the congressman from Florida, who took to the floor of the House yesterday to express his great disappointment in Mr. Speaker, impeachment inquiry or not.
No continuing resolutions, individual spending bills or bust, votes on balanced budgets and term limits, subpoenas for Hunter Biden and the members of the Biden family who've been grifting off of this country, and the impeachment for Joe Biden that he so richly deserves. Do these things or face a motion to vacate the chair.
Motion to vacate. Not if Marjorie Taylor Greene has anything to say about it, though. The congresswoman from Georgia talking about it on Newsmax, laying it down for Eric Bolling last night.
I think that we need to give Kevin McCarthy credit. He's doing the right thing, and he's actually leading the House in opening the impeachment inquiry that I've been demanding, Eric, and I'm thrilled about it. And I really want this to happen, and I don't want anyone to stop it. And so that's why I've been saying we don't need a motion to vacate. We don't need to be the party of chaos. We need to diligently do our work, continue with the impeachment inquiry.
And it's a riot if you're looking at the Twitter or the X. Marjorie Taylor Greene retweets Matt Gaetz, who, as you just heard, not happy with Speaker McCarthy. He says, remember, when Kevin McCarthy makes his announcement in moments, this was yesterday morning, that I pushed him for weeks. Marjorie Taylor Greene retweets saying, correction, my friend. I introduced articles of impeachment against Joe Biden for his corrupt business dealings on his very first day in office. And so this is going well so far in the first 24 hours. Let's assemble the panel. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, are with us. Jeannie, you can't buy this kind of entertainment, certainly not in Hollywood at the moment. How is this going to play out for Kevin McCarthy in the next couple of days? He's being asked about a double standard or a shifting message on whether to hold a vote for an impeachment inquiry. He's not even making his own Republican members like Matt Gaetz happy. So what happens next?
Yeah, and by the way, I'm going to vote for Marjorie Taylor Greene in the Marjorie Taylor Greene Matt Gaetz contest over who's most responsible. I am calling this the halibut Diet Coke impeachment, because that is what the Times is reporting she and Trump were eating last Sunday night, 2 days before Kevin McCarthy. Yeah, it makes you hungry, right, Joe? 2 days before.
That must be well done halibut, I'm guessing.
2 days before we heard from Kevin McCarthy that indeed, forget what he said 13 days ago, he was marching forward with his impeachment inquiry with no vote. And, you know, the reality is Kevin McCarthy is in a very, very difficult position. And this is a reflection of that. You know, Stephanie Murphy, Representative Murphy, just talking about the hypocrisy, get ready for it. Well, here it is. It is on full display with what he did yesterday. I am somebody who famously was not in favor of Trump's first impeachment on Ukraine for the very reasons Nancy Pelosi said initially before she turned around, nor am I in favor of this. They are diminishing what impeachment was intended to do by the framers. And there is no putting the genie back in the bottle now. This is what we are going to have to live through. And look at the media coverage yesterday, a bleep on this, and then people just moved on, because this has just become sort of par for the course, where it never should have been and never was when you go back, you know, a few years ago.
What do you think of the language so far? It's been just 24 hours, Rick. The uprising inside the Freedom Caucus, where the Chip Roys and Andy Biggs say we're not changing our tune on a shutdown or a CR because of this. Matt Gaetz is yelling back and forth with Marjorie Taylor Greene, and journalists are asking about a changing tune on a vote. Did Kevin McCarthy just do the wrong thing? Was this self-preservation, or did he actually hurt himself with this announcement?
Well, I mean, he did this arguably to satisfy, you know, the Freedom Caucus and its fringe groups, you know, around it. And what has happened? They've sort of turned on themselves, you know, and so maybe that was part of his strategy, is just create chaos on the right flank and try to get some work done, you know, in the House of Representatives with everybody else. I doubt if he's got that sophisticated of a strategy. He tries to make these people happy. These are performance artists. They're not members of Congress. They don't really care about legislating or, you know, doing work of government. They care about, you know, their number of Twitter hits and how many clicks they get. And that's why you have these kinds of outbursts. They're non-productive. And Kevin McCarthy is just sort of giving them something to chew on for a couple of days. We got to constantly remind ourselves inside the Beltway here, you know, the vast majority of people in this country pay absolutely no attention to this because they see it for what it is. You know, it's as you know, Stephanie Murphy said, you know, we are now watching the height of hypocrisy enter the House of Representatives. I mean, and she knows something about that, you know, the time that she spent there. And I don't think Kevin McCarthy has done himself any good. He hasn't moved the ball forward. He isn't going to get anywhere on this impeachment. He's got over 30 House members who won't even vote for ultimately an impeachment, and we know it won't go anywhere in the Senate. So I think he's just unleashed the crazy caucus again, and we'll see if they can get anything done, because what's really important, you know, is getting a budget passed, getting a CR passed so they can get the work done in the House, get some of these appropriations bills done. And by the way, and fund the Ukraine resistance to the Russian invasion, and make sure that you know, our country is helping out these communities that have been devastated by horrible weather disasters. So I mean, they have things to do, and they ought to get off of Twitter and get on with their business.
Well, here, Rick, did this at least make a shutdown less likely, Jeannie, or did it not change anything in the standoff on the budget?
You know, I think Kevin McCarthy was hoping it might, but we heard from Matt Gaetz, and you played the clip. He is demanding total compliance. And so, you know, Kevin McCarthy, I think, believed that he was handing them something going to sort of distract them, which has been his strategy since he became speaker. Distract them by giving them something and hope that they don't see what's going on here, which is he needs to do the basic tasks of governing, which is keep the government open, stop it from being shut down. But look at what he's facing. The House has passed just one appropriations bill to the Senate, who has passed all of them. He knows that. He knows he doesn't have a leg to stand on here. They've got to do that. It's like a mayor who doesn't shovel the sidewalks after you have a terrible, terrible snowstorm. You're going to be in political trouble. Kevin McCarthy knows he's in trouble with this, so he's trying to distract them. But Matt Gaetz told us yesterday he's on to Kevin McCarthy now, and he's going to make sure to hold his feet to the fire. So I don't think this is going to help Kevin McCarthy in the way he thought. He is literally buying hours of his time in his job and hoping to stave off this motion to vacate, but it's going to come, as will the shutdown. And by the way, the impeachment inquiry vote, he's saying, to his 19 members in Biden districts, you don't have to vote for that. Well, I'll be the hypocrite and not let you vote. They're going to have to vote for that because this train is out of, it's left. They're going to have to vote on it.
Well, certainly if you believe there's going to be an impeachment that follows the inquiry. Listen, Rick and Jeannie, to Elise Stefanik, of course, in the Republican leadership in the House, held a news conference today alongside James Comer, who's spearheading this impeachment inquiry on the Oversight Committee. Listen to the language she used to describe the charges, which she believes are full-on crimes. Charges against Joe Biden.
Speaker McCarthy announced House Republicans' intention to pursue an impeachment inquiry of Joe Biden. This is about transparency and answers for the American people, and ultimately accountability for what I believe will uncover the biggest political corruption scandal in our nation's history.
The biggest public corruption scandal in our nation's history that would be something. And we'll talk about that more next with our panel as the White House now responds with a memo to the media. We'll talk about that next with Rick Davis and Jeannie Shanzano after we get an update on world and national news. Now we do that with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. It took nearly 2 weeks, but Pennsylvania authorities say they have recaptured an escaped killer.
Authorities captured Danilo Cavalcante Wednesday morning after he spent 2 weeks on the run, evading hundreds of searchers. Pennsylvania State Police Lieutenant Colonel George Bivens says Cavalcante's heat signal was picked up by an aircraft overnight, marking the beginning of his end as a fugitive.
Tactical teams converged on the area where the heat source was. They were able to move in very quietly. They had the element of surprise.
Bivens says Cavalcante was armed when he tried to escape by crawling through thick brush and continued resisting as he was taken into custody. No shots were fired. Steve Rappaport, Bloomberg Radio.
Lee remains a hurricane, but is expected to be downgraded today. John Cangelosi is a hurricane specialist with the National Hurricane Center. He says Lee is still moving north in the Atlantic and could impact portions of the eastern seaboard later in the week.
If you have interest or you live in coastal New England, generally from southeastern Massachusetts up through Maine, you got to keep an eye on this one.
Cangelosi says the storm will likely turn into a nor'easter-type storm by the weekend, with high winds and coastal flooding. Senators have been meeting behind closed doors today with leaders of the big tech companies like Meta, Microsoft, Alphabet, and Tesla. They're seeking input on how to regulate artificial intelligence before it's too late. Elon Musk spoke after the meeting.
I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive.
Musk calls AI a civilizational risk. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do tell you to check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ in the green. We've got the S&P up by 15 points right now, just about higher by 0.4%. Wall Street taking today's CPI numbers in stride. The Dow's up 31 points, up by 0.1%. NASDAQ up 88 now. That is a gain of 0.6%. 10-year yield 4.24% with a 2-year at 4.96%. Gold down $2 the ounce, little change, $19.10 the ounce. Bitcoin is up 0.3%, 26,158 on Bitcoin. And West Texas Intermediate crude is down 0.5%, 88.39 right now for a barrel of WTI. A mixed inflation report is reinforcing speculation that the Federal Reserve will be pausing its rate hikes, but refrain from calling the end of its tightening cycle. And with more on this morning's CPI report, here's Bloomberg's Vinny Del Giudice.
Core consumer prices topped Wall Street estimates in August, leaving the door open to more Federal Reserve interest rate hikes this year. Fed officials meet next week. They've been growing optimistic inflation can be tamed without causing a recession. The Fed's benchmark interest rate has gone from near zero last year to more than 5%. Vinny Del Giudice, Bloomberg Radio.
Again, a move lower for crude, down 0.5% now, 88.41 a barrel. Talking about West Texas Intermediate crude. Oil hovering near its highs of the year as the International Energy Agency adds to a drumbeat of forecast that the market will tip into a significant deficit in the second half of this year. Oil stocks, they are lower right now. Case in point, ExxonMobil down 0.9%. ADRs of BP down by 0.3%. Chevron lower now by 0.5%. Recapping, stocks are higher. S&P up 16, up by about 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I'm used to listeners and viewers telling me how to do my job. But the White House is a different level. A memo out to U.S. news media organizations in the wake of Speaker McCarthy's announcement that he is launching an impeachment inquiry into President Joe Biden. The subject line, it's time for the media to do more to scrutinize House Republicans' demonstrably false claims that they're basing impeachment stunt on. Let's reassemble our panel. Rick Davis and Jeannie Shanzano join Bloomberg Politics contributors as we consider the reaction from the White House. Rick, I don't know your thoughts on this. The memo goes down to the first series of bullets here refers to Representative Ken Buck, the Republican from Colorado, has been doing a lot of work for the White House last couple days on cable news. He talked about it again on CNN, said he sees no evidence. This is a familiar refrain from Ken Buck. But should the White House be digging in like this or laughing it off right now?
Well, it's obvious this is a reaction to the coverage from the last couple of days, where I think they've got a chip on their shoulder, and they think that people like Marjorie Taylor Greene and Matt Gaetz are getting way too much attention in the mainstream media because all they're talking about is a process argument. They're not answering any questions about what the real issue is here, and that the media is giving them more attention than the people who in the Republican caucus are actually saying they don't see the connection between Biden and these charges. So, and I kind of get that. I actually do think the media has been chasing sort of the crazy end of the caucus, a lot more than it does everybody else. I mean, I think the bigger story is there are probably over 30 Republicans who don't support the speaker on this, which is why he had to unilaterally open up a probe. So I think they're a little bit taken aback that the media isn't doing their job for them. And this memo basically says, hey, you should be embarrassed by the fact that you're really not giving these guys more attention. The irony is they're using quotes in the media to make the case to the media that the media isn't doing enough. And so I think if I'm a reporter who are writing on these things, I'd think that they were kind of overinflating this.
Well, if the memo is just going to get leaked by the media, White House telling the media how to be better at the media, Jeannie, is there a point in sending it?
You know, I think this is something that could backfire on the White House. I think putting out the facts is one thing, putting out their position is one thing, but trying to tell the media how to do their job, we all know no White House likes the media. But the reality is, if the media starts to exhibit some criticism of the Republicans and what they're doing in terms of impeachment, you're going to hear right back, oh, this is just the media doing the bidding, the liberal media doing the bidding of the White House. So I'm not sure how this helps the White House at all. I think more important is to keep focused on, number one, doing the business of the American people. Number two, putting out the facts. And let the craziness in the House play out. It speaks for itself. I don't know why they are trying to get in front of it, if you will, and make themselves the story.
Well, Rick, the craziness in the House, I guess, extends to the craziness in Washington, as we have a breaking headline here that reminds us of the world that we're in. Mitt Romney is just now announcing in a Twitter video that he will not seek re-election in the Senate. I wonder your reaction to that news.
Yeah, I mean, it's kind of expected. Mitt is never really been a feature of the Senate. He's had a stellar career as both governor and presidential candidate. I think he was looking at the sort of future trajectory of the Republican Party. And, I think he's kind of the outlier, right? He's more in the McCain wing of the Republican Party than he is in the Trump or whatnot wing, and he's pretty isolated in the caucus because of that. That being said, I think he's enjoyed being the senator, but politics at home also is very difficult. He'd have to run a probably very competitive primary, spend a lot of money, raise a lot of money, and those kinds of things, they take you away from your family and the work of the Senate, which is what he really enjoys. So I'm not surprised, but disappointed. You really hate to see a competitive seat like this, thrown open to whatever sort of, is lurking around Utah. But, he's served his country well, and I'm sure he has big plans for his life after the Senate.
Yeah, I do wonder what they'll include. But Jeannie, Democrats love moments like these. This is when you're supposed to tell me that the party has moved away from Mitt Romney, not the other way around, right?
Yeah, except I think it's a loss for all of us. I mean, Mitt Romney is one of the grown-ups, so to speak, in the room. We need more people at this point like Mitt Romney in Washington. Hard to believe. I didn't think several years ago I'd be saying that, but he does come with, telling it like it is and speaking truth to the powers that be in the Republican Party today. So I think it's a loss for all of us, not just for the Republican Party, but for sure Democrats are happy with what has transpired, and they would like to have a shot at that seat.
He's not going to run for president again, I'm assuming, Rick, although that story seems to crop up every 4 years. What is in store for someone like Mitt Romney? Where could he be of service?
Look, I mean, I think that obviously he has a point of view on democracy. He has been crisscrossing the country, talking about how important it is that our democratic institutions, elections and whatnot, are reinforced and really fortified against the attacks that the Trump administration and campaign waged against them. So I wouldn't be surprised that he devotes more of his time to really trying to cement our democratic institutions around the country and crisscross the country talking about how important that is. He was generous enough with his time to come to the McCain Institute Sedona Conference and gave a similar speech and was very passionate. It's probably one of the best speeches I'd ever seen Mitt Romney give. And believe me, I've seen a lot of Mitt Romney speeches over the years. And this is an area I think he's very passionate about.
This is from the video just posted on Twitter.
The next generation of leaders must take America to the next stage of global leadership. While I'm not running for re-election, I'm not retiring from the fight. I'll be your United States Senator until January of 2025.
Mitt Romney announcing today he is not seeking re-election. Some final thoughts ahead from our great panel, Rick Davis and Jeannie Shanzano, as we try to get our arms around AI today in Washington. The big meeting of the minds on the Hill with the titans of tech. We'll talk about it next. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pelham. Citigroup is preparing for a wave of job cuts as CEO Jane Fraser restructures the Wall Street giant to operate from 5 main businesses. Citigroup shares are up now by 2%. Amazon has unveiled a new push to get people into homes. Bloomberg's Steve Rappaport explains.
Charlie, Amazon.com is making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. The move comes after the e-commerce giant has provided some $1.27 billion to create or preserve affordable rental units as part of a $2 billion initiative launched 2 years ago. The home ownership program will back projects near the company's 2 headquarters sites in Seattle and Arlington, Virginia, as well as Nashville, a hub for Amazon's logistics group. The National Housing Trust, a nonprofit, will use Amazon's cash to acquire or build affordable homes in partnership with local organizations. Charlie?
And that's Steve Rappaport reporting Amazon shares. They're up now by 2.1%. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. today. For the most part, we are looking at airline stocks that are trading lower. American down by 5.5%. Most mega caps are gaining, with the chiefs of 5 of the 10 biggest U.S. companies appearing at a closed-door Senate meeting to shape how AI is regulated. More on that topic coming up on Sound On. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington. We're coming up in the next hour. We'll be joined by Congressman Michael McCaul, the chair of the House Foreign Affairs Committee, with news now just breaking from Capitol Hill. Members of the Republican Conference, hardline Republicans in the House, have blocked debate today on a bill to fund the military. So the talk is growing ever louder about a possible government shutdown. Let's bring you up to date on things now. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. With an auto workers strike possible without a deal by midnight tomorrow, UAW President Shawn Fain plans to detail the union's strategy later this afternoon. Any potential strike in Detroit could have political ripple effects beyond Michigan, and not just for the self-described most pro-union president ever. Bloomberg's Nathan Hager has more from Washington.
Democratic Senator Sherrod Brown of Ohio has a lot riding on the United Auto Workers reaching a deal with the Detroit Three. Brown is a strong backer of the union, and he's already in for a tough re-election fight in a state that former President Donald Trump carried twice. Ohio is home to a General Motors battery factory. Brown has led dozens of Democrats in pushing the automakers to include battery workers in their next contract. In Washington, I'm Nathan Hager, Bloomberg Radio.
Republican Senator Mitt Romney of Utah says on X today it's time for a new generation of leadership. While he says he's not running for re-election, he's not retiring from the fight. He says he'll be their U.S. Senator until January of 2025. We're learning more about what was discussed behind closed doors today when senators hosted tech leaders from Tesla, Meta, Alphabet, and Microsoft. They talked about artificial intelligence, and Elon Musk warned it's a double-edged sword, being a source for good, but also a risk to civilization. It took nearly 2 weeks, but Pennsylvania authorities say they've recaptured Danilo Cavalcante. Pennsylvania State Police Lieutenant George Bivens says Cavalcante's heat signature was picked up by an aircraft last night, and they moved in this morning.
Shortly after 8 a.m., tactical teams converged on the area where the heat source was. They were able to move in very quietly. They had the element of surprise. Cavalcante did not realize he was surrounded until that had occurred.
Bivens says Cavalcante suffered a bite wound from a police canine. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Joe.
All right, Nancy, thank you. You'd think a night out to the theater might be a nice thing here as we get back to reality after Labor Day. It was not the case for Congresswoman Lauren Boebert, who was kicked out of a Beetlejuice show in Denver on the eve of her return to Washington. They went out Sunday night, ahead of the big week, get a little theater, maybe some dinner. The theater did not name Boebert, but the video is clear as you show them being escorted. Having refused to leave, initially the police had to come after guests complained that Miss Boebert and her guest, a gentleman she was with, were vaping, singing, using phones, and causing a disturbance during Beetlejuice. So in other words, it was a regular State of the Union. As we reassemble our panel for some final thoughts on this, Rick Davis and Jeannie Shanzano. Jeannie, I don't know, maybe it's good for business. Can Lauren Boebert raise money on this?
Hey, she can raise money on anything. And I love the thing she said when she was departing, when all the stars say this when they're in trouble. Do you know who I am? I'm going to call the mayor, is what she was apparently saying to them as they escorted her out.
Yes.
Never a good sign, but she admitted it on her social media, and I think she'll try to raise money off it. So nothing new.
Do you know who I am, Rick Davis? It never seems to end well in the police blotter or in the media. Do we still have Rick? Rick, you might be muted. I can't hear you. I bet he's saying something good, too.
At least it's good news for the theater industry that she enjoyed herself so much she sang too loud.
Yeah, I guess that's the truth. Long Long live the musical theater. Rick, thank you. Jeannie Shanzano, thanks for humoring us as always. You know, you can get the latest news whenever you want it with Bloomberg News Now, something we want you to know about. Top stories from our global team of reporters with just a click. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, anywhere you get your podcasts.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? Is the economy stupid? Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the eight ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
AI has its big day in Washington. Welcome to Hour 2 of Sound On, as the titans of tech gather on Capitol Hill for a special closed-door meeting with the entire U.S. Senate, as lawmakers try to get their arms around a fast-moving technology and the slowest-moving legislative body here. We're going to get an update from the Hill in just a moment from Bloomberg's Kayleigh Lyons, who's been rubbing elbows with the likes of Elon Musk and Mark Zuckerberg for the balance of the day. Must have been something I said for the music there. Hardline Republicans, meantime, blocked the House from even debating a bill to fund the military. This just emerged, and it's something that we're going to talk about with new questions about a possible government shutdown with Congressman Michael McCall, who chairs the House Foreign Affairs Committee, a conversation that Bloomberg's Anne-Marie Hordern will be joining, so you don't want to miss that. Right now, it's Wall Street. Let's get an update on trading from Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthew. Higher across the board. Do want to begin, though, with a headline from the Bloomberg Professional Service. In fact, a story out of Washington. The U.S. Treasury logged a rare surplus for the month of August as the department accounted for revenue from student loan payments, reflecting the Supreme Court's invalidation of the Biden administration's move to forgive the debt. The federal government had an $89.2 billion surplus for August, as officials added $319 billion to revenues because of July's Supreme Court ruling. Stocks do remain higher across the board. CPI Wednesday, we got the report this morning, and the S&P right now, muted gains up by 0.3%, up 14 points at 44.75. The Dow up 15 points, a little change now, up by less than 0.1%. NASDAQ, the composite index, up 80 points, higher by 0.6%. 10-year yield 4.23%, with a 2-year yielding 4.95%. Gold, little change, down 0.2%, $19.10 the ounce, lower by $3.36. West Texas Intermediate crude down 0.4%, 88.45 for a barrel of WTI. Well, as for the overall market backdrop, Darryl Cronk is Chief Investment Officer for Wealth and Investment at Wells Fargo Bank.
We're stuck between this 4,300 and 4,600. All we've done is bounce back and forth between it. At this point, you need something to change in the baseline to really accelerate beyond the 4,600. Equity risk premiums are at a 19-year low. I'm not getting paid to take equity risk today.
And right now, again, the S&P at 44.76. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping, stocks are advancing. S&P up 14, now up by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. It's not every day you see Elon Musk, Mark Zuckerberg, Bill Gates, Sundar Pichai, and the others all in one room. Never mind here in Washington with the entire Senate. That's asking a lot. It actually happened starting early this morning. You should have seen the line outside the Russell Senate office building as they all got out of their black SUVs and went indoors for a closed meeting, not to be confused with a congressional hearing in which people would be sworn in to testify. But that's why Bloomberg's Kayleigh Lyons went down to Capitol Hill first thing today to witness all of this, and she joins us right now, as she typically does at this time, just from a very different place in town. Kayleigh, you've been rubbing elbows, as I mentioned, with Elon Musk and Mark Zuckerberg and the rest. This is a day-long meeting, I guess is the word we're using, and it's not over yet. What's happening?
Yeah, it's not over yet. They just had the lunch break, Joe, and then they're going to start the second afternoon session, though not all the CEOs that were here this morning are going to take part in that session that's ongoing now. Elon Musk has left the building, as has Mark Zuckerberg and Sundar Pichai. They have stand-ins, other executives from their companies that are going to join this second session. Also, I would note, most people did arrive in black SUVs. Elon Musk, though, did arrive in a Tesla. Now, as for what Elon Musk and the others told lawmakers, we understand that there was a lot of just high-level conversation, though when Senator Chuck Schumer, who of course really is the one who was leading this summit, asked for a show of hands about whether or not any of these participants thought the federal government had a role to play in AI regulation, almost everybody did raise their hand. And when Senator Chuck Schumer emerged from the meeting, talked to reporters at the microphones, he said that it was a robust discussion. He comes out of the room exhilarated, and clearly there is a role for the federal government to play. Elon Musk, though, when he was leaving Capitol Hill, did talk to reporters, was asked what he would like lawmakers to do from here. This is what he had to say about that.
The sequence of events will not be jumping at the deep end and making rules, but it starts with insight. In fact, this is actually how all of the regulatory bodies have been formed, I believe. Is you start with a group formed to create insight, to understand the situation. Then you have proposed rulemaking. You'll get some objections from industry or whatever. And then ultimately you get sort of a consensus on rulemaking. That rulemaking then becomes law or regulation.
And Joe, I would add that he was also asked if AI was going to kill us all, but he said he doesn't think so. He hopes not. There is a non-zero chance, but he thinks it's pretty low.
Okay, interesting. He tackled the issue that we all want to tackle as well, it seems, Kaylee. And that, of course, is, are the robots going to kill us all? Let's listen to what he said, and we'll have you respond to where this came from.
I hope not. You should think of the future as a series of probabilities as opposed to certainties. There is some chance that above zero that AI will kill us all. I think it's low, but there's some chance. I think we should also consider the fragility of human civilization. And if you study history, I think you realize that there's a rise and fall to every civilization. Every civilization has sort of a lifespan. So we want ours to last as long as possible.
All right, Kaylee Lines, is that the tenor of the conversation we think was being had in there, or was it just reporters trying to get abstract with Elon Musk?
Well, probably a little bit of both, Joe, but there really was a sense of urgency here today. Pretty much everyone I spoke with did convey that. Sam Altman, the CEO of OpenAI, when he was walking into the hearing, I asked him, hey, what's your message to lawmakers? And he literally said that this is urgency, that in many ways we're in an unprecedented moment in time. It does become a question, though, Joe, of timing. As grave as the threat may be or the potential of this technology, we are talking about a legislative body here that historically moves very slowly and technology that moves very quickly. And I actually caught up with Republican Senator John Kennedy of Louisiana. I asked him, about whether he thought forward progress was being made today. He also talked about how close Congress really is to doing something about AI. He didn't sound too optimistic. Take a listen.
In terms of, do we have some sort of overarching regulatory framework that we're close to agreeing on that addresses the dangers and the potential of artificial intelligence? In my judgment, no. We just don't right now.
So he doesn't think it's there right now. As far as a regulatory framework, there's also apparently some conversation that is being had and has had in this room today as to whether there should be an entirely new regulatory agency developed to oversee AI. This is something that Sam Altman has advocated for. Microsoft is supportive of as well. There are other CEOs, though, who don't like it very much. IBM, not a fan of that idea. So it becomes a question of what regulatory body would even ultimately be in charge here.
Wow. It's an interesting day here. Kaylee, we really appreciate your reporting and bringing us that story from Capitol Hill. They're not going to be done for a couple more hours, so we'll let you know if more happens when the Titans emerge. Kaylee Lines, thanks as ever from Bloomberg here in Washington, D.C. as we assemble our reporters panel here ahead of our conversation with Congressman Michael McCaul. He's going to join along with Anne Marie Hordern in just about 10 minutes' time. Well, let's try to get to the bottom of this AI business, or at least what this means for us today in Washington, with Wendy Benjaminson, Bloomberg Washington senior editor, joins us at the table. And up on Capitol Hill today, Billy House, Bloomberg congressional reporter. It's great to have both of you with us here. Wendy, I'll start with you. The significance of this, I think, is really important. You know, people are asking, well, what are the deliverables? Where's the legislation? But what actually happened today is there was a gathering so important that it got everyone's attention on an issue that we wouldn't otherwise be talking about. We'd be hung up on the news of the day of the impeachment inquiry or whatnot. Did Chuck Schumer succeed in at least getting our eyes on the ball?
Yes, I think if by that measure, absolutely. You've got 20 or more of the most powerful tech executives in the world, the people who are actually trying to exploit this, control it, somewhere in between. And at least the U.S. Senate is at least heard some expertise on it, heard the challenges in controlling it or regulating it, which I think would be very, very difficult. Yeah. On the other hand, this is the same Congress who, like, I think it was about a year ago, they had a Google executive and a Twitter executive in a hearing, and the members of Congress were asking the Twitter CEO about things on Google that couldn't work on his phone and things like that. Yeah. And so Congress has a long way to go into just the beginnings of understanding this, and this was a baby step.
Well, okay, sure. So, Billy House, was this a briefing? Was this the beginning of lawmakers learning more about this? Or was it to get all of our attention on a critical issue? Maybe you have a different way of seeing it.
Well, there's been legislation to regulate, put guardrails on AI research and developments, but at the same time, it's an area that Congress does realize is very competitive, is fast moving. So exactly how many guardrails or what kind you want to put on this is something they are only now beginning to understand. And I think some of that discussion took place today, and also in the context of everything, including creative rights, which is timely now, and the impact on, for instance, screenwriting, that sort of thing. I know Pelosi over here in the House was very concerned about that. So, I mean, we don't know exactly what and the parameters of the discussions today, but certainly it took in some of those areas.
You know, you mentioned tech executives being dragged up for hearings. Wendy, they're usually torn to shreds in these things because they're usually antitrust related or consumer focused. Today, they're the captains of industry, and we need your brains now to figure this out. But was this also getting everybody in the room kind of calling out all of these executives? Your companies are on notice. You know, we actually have our eyes on you here. We know that this is important.
Yes, absolutely. I think that's true. And I think some of the questioning reflected that. You know, and this whole notion of the vast power with AI that is now in the hands basically of these 20, 25 people, and just what they control. And Congress, of course, seeing someone else in control of something, wants to get in on the game.
How about that?
And but it will be a while before they're able to figure out, as Billy and others said, even how to regulate this.
Well, I've got to ask Billy about what's happening elsewhere on Capitol Hill, because it's been quite a 24-hour period. Billy, every video I've seen of Speaker McCarthy walking out of his office includes you standing next to him with your phone. So I think you're probably the closest thing to the sun that we have right now. We just learned, before I ask you about impeachment, or maybe I should ask you about a shutdown, that I guess there are members of the Republican conference who today blocked debate from even happening over a military funding bill. Does that make a shutdown more likely?
Oh, I think it does. And I think it showed this was just a one bill out of the 11 still left to be passed in the House, that the uphill climb that the Speaker and the House has in addressing government spending before a end-of-month deadline to at least do a temporary stopgap measure. They couldn't even get a rule, which is basically a vote on how to proceed on this military-related bill, passed, or at least McCarthy worried it would not pass. There was no agreement. And so he took it off the floor. So that's certainly not a good sign, and it's kind of left people back on their backpedaling on some of their claims that this can get done, And they're downstairs now trying to figure out what kind of pieces to pick up, not much less whether those pieces will all, develop into some kind of, advancing of a bill by the end of the month.
Speaking of backpedaling, Kevin McCarthy answering questions now and having to defend his decision to do an impeachment inquiry without a vote. We've all been thrown back to 2019 after what he said today. Basically, it's Nancy Pelosi's fault. This is how he put it.
Nancy Pelosi changed the president of this House.
But
this doesn't preclude from a... Nancy Pelosi changed the president of this House on September 24th. It was withheld and good enough for every single Democrat here. It was good enough for the judge. Why would it have to be different today?
Let's go back to September 24th, that very day he's referring to. Listen to then Kevin McCarthy.
Our job is to legislate, not to continue to investigate something in the back when you cannot find any reason to impeach this president. She cannot unilaterally decide we're in an impeachment inquiry.
Okay, beyond this is why people hate Washington, how long can he keep a straight face on that?
Oh, he can keep a straight face on this through the Senate vote to acquit Joe Biden. And I'm only saying that because the Senate is a Democratic.
Is this a new precedent, though? We do this every time there's a new president, just impeach him. It won't mean anything.
It's shocking. I mean, in the history of our republic, there was one impeachment, Andrew Johnson.
Yep.
Nixon resigned before he could be impeached, and then
now it's an annual.
Now it's like an annual event, exactly. Every time you don't agree with the president or you think you can score political points, one party or the other seems to impeach, which, the way we went to school and learned it, impeachment is literally a nuclear option. You should save that for when there's no other way to remove a dangerous president, or things like that. So, yeah, but yes, Nancy Pelosi did start it without a vote. I think 5 weeks or 5 months into it, there was a vote. And she did it for the exact same reasons Kevin McCarthy is skipping the vote. It's not going to pass. And so even though he said back then his job is to legislate, he's going ahead with this impeachment inquiry because he's afraid to lose his job if he doesn't.
We've heard motion to vacate. Well, we heard it on the floor, Billy, from Matt Gaetz yesterday. Not convinced. Chip Roy not convinced by this. They're not signing on to a continuing resolution, apparently. How would you describe Kevin McCarthy's station in the universe right now when it comes to his tenure, when it comes to the gavel?
Well, it's basically where it's been. McCarthy likes to say he wakes up every Monday morning eager for the challenges ahead, that the media says he can't solve them, and then by Thursday they're asking him how he solved them. But this is far more complicated. On the impeachment, in fact, he did not hold a vote, in part because a good chunk of his conference, especially freshman members in districts Biden won in 2020, didn't want to go on record as voting on anything on impeachment. And so this sort of unilateral order to hold a hearing, an impeachment inquiry, was his way to insulate them from having to cast a vote. With regard to Pelosi, she did eventually hold a vote, and that vote actually prompted public hearings. So McCarthy isn't saying we're not going to have public hearings, though, before a vote. And in fact, he is planning, and the committee chairman involved are planning to hold public hearings. So there are differences even with what Pelosi did, and there's no time frame. So it's quite possible there never will be an impeachment vote on the House floor, but there will be a lot of investigation of a Democratic president by a lot of allies of a potential Republican president again.
Well, you know what hearing we are going to have, and apparently it's going to be this month, the first hearing of the impeachment inquiry. Congressman James Comer, who chairs the Oversight Committee, spoke about that in a briefing earlier today.
We plan on having a hearing in September that will kind of evaluate some of the things that we believe have happened from the Biden family that are in violation with our laws. So what I said in January holds true to today. We are following the money, and we will see where that leads us.
Well, so we're still not sure, I guess, where we are. If we still need to see where this leads us, Wendy. I thought there was evidence to prompt an inquiry.
if you've seen the evidence, there's a lot of people saying they believe this happened, they think this happened. There is still no hard evidence, and unlike the attempt to impeach Donald Trump over Ukraine, there was at least that phone call that the so-called, what Donald Trump calls the perfect phone call, but when he asked the Ukrainian officials to investigate or to not help Biden. But yes, there was at least something there. Here we have a lot of smoke, no hard evidence, and I think the impeachment inquiry is to find some evidence.
Yeah, and it could lead anywhere, as they say. Billy, what's going to happen in that hearing in September? Do we have any idea?
Well, there's a very good chance that the administration or members of the administration will try to block some of the testimony or documents being sought between now and then for that hearing. And so that's kind of that's one of the rubs with what McCarthy has done. On one hand, he likes to say that an impeachment inquiry, quote unquote, elevates the power of the House to obtain documents to demand testimony. At the same time, there's been no actual vote on the House floor, and therefore can easily be argued or will be argued in court that there's no actual formal impeachment inquiry. So he wants it both ways. There's also possibly the fact that the possibility he doesn't really want any resolution. He's just trying to, as you've mentioned, not be ousted by the conservatives demanding he do something, at the same time not putting his moderates in jeopardy by making them vote on anything.
Yeah, wow. This is going to be quite a month.
It is going to be quite a month.
As we juggle
ending with a government shutdown.
The start of an impeachment inquiry and potentially the start of a shutdown, although the conventional wisdom just a couple of days ago was that a stopgap was in the cards. Are we moving on from that?
Apparently, after this business with the defense bill today, it doesn't look like a stopgap is going to be accepted by the hard right conservatives.
Yeah.
They actually have said they want to shut down the government so that they get their way. At least they're threatening that.
An impeachment inquiry makes it difficult for Kevin McCarthy to count on Democratic votes to keep the government open. So here we are. This is not getting easier.
It's getting a lot harder. I'm hoping he still wakes up Monday morning feeling so optimistic.
Well, I'm glad someone is. Wendy, thank you. Wendy Benjaminson, it's always a great pleasure to have you with us. Bloomberg Washington senior editor. And Billy in the house, Bloomberg congressional reporter. Billy, always love talking to you. Billy House, great reporting. If you'll see a picture of Kevin McCarthy anywhere, look for Billy. We'll get you his autograph. As we prepare to bring in Congressman Michael McCaul in an important conversation that we've been looking forward to here on Bloomberg Sound On, I'm joined by my partner on Balance of Power. Bloomberg's Anne-Marie Hordern is with us here in the studio in Washington, D.C. For the conversation that we're about to have with the congressman who chairs the Foreign Affairs Committee. It's great to see you, Anne-Marie. Thanks for coming over to talk to us on the radio. I feel like I finally got through to your agent. This is huge. So we have pretty.
We actually sit next to each other. Right?
Well, actually, out there we do. Yeah, it's all different rules in the studio. See, this is kind of like the Avengers. We're coming together from different shows and comic books to make one great program here.
Exactly.
Thanks for coming over. Now we have breaking news from the House today. Around this time, we're talking about yesterday an impeachment inquiry. Today, as we were discussing with Wendy and Billy. An attempt to even debate military funding was blocked in the House. So we're wondering if this is already over.
Well, it certainly feels that way, doesn't it? Or is it just such that it's the beginning of all these negotiations, that everyone is coming in fully with their walls up and they're not willing to make any concessions so early on because they say, in Congress time, 18, 17, 16 days, that's actually quite a long time.
Well, I suppose that's right. What do we have, 17 days to a potential shutdown? With that said, though, the idea of the House and Senate getting together is quaint when the
over
House
$100 billion
get itself together.
It doesn't seem like it'll happen in this lifetime, as that's how it feels right now.
Sure.
But at some point, they have to fund the government.
That's true. That's coming at the end of this month. We could have a lot of things happen between now and then, and we'll talk about that in just a moment with Michael McCaul. But there are a lot of different things that we're looking at. If it's an impeachment inquiry hearing this month, that's going to take a lot of time, potentially away from negotiations that Democrats may not be very friendly in now because of the impeachment maneuver. So it's hard
exactly.
to tell
This is where I think it's very difficult for McCarthy, not just how he's dealing with his own caucus, but because he decided to go for this probe, any Democratic votes he needed, the Democrats to vote for a continuing resolution, has he now just negated them? They're not going to sign up for his plan.
Right.
Because of this impeachment inquiry. It does feel like he's more reliant on Republican votes, or the Democrats say we're going to take the high road. We want to keep the government open.
All great questions here.
But it's going to be a difficult maze for him to navigate.
That is for sure. As we find the headline on the terminal, GOP hardliners stall military funding, raising shutdown risk. And we add the voice now of Michael McCaul, the congressman from Texas who chairs the House Foreign Affairs Committee. Congressman, it's great to have you with us on Bloomberg. Thanks for coming back. And now that we're getting back into the swing of things here in Washington, indeed, we'd like to ask you about a few issues. But with regard to this latest development here, did that make a government shutdown more likely?
Well, as I understand it, the rule has been postponed. I think they're working out details with the defense appropriations bill. So I would not try to read too much into that. I'm still hopeful that we will have, a rule vote this evening and move forward with the defense appropriations bill, possibly as early as tomorrow. So I don't see that shutdown as imminent as maybe you're indicating. Frankly, I'm not a big fan of shutdowns. I've never seen a shutdown work very well, especially for my party. Republicans always tend to lose when the government's shut down. So I think the American people want us to govern, and they want us to get things done. I think the speaker is trying to do that, and it's, as you noted, very difficult under the circumstances. But he's always been underestimated every time, and he seems to be able to pull a rabbit out of a hat, in prior legislation that we've had. So I still remain optimistic.
Congressman, what we're talking about here is that hardline House Republicans didn't even vote to allow defense spending to be debated. This is in the House. In the Senate, we still have Senator Tommy Tuberville holding up more than 300 military nominations. What do you say to American people who look at both the House and the Senate and say the Republican Party is potentially hurting the U.S. preparedness, military preparedness, and it can cause national security concerns?
I share those concerns, and I voice those on CNN, State of the Union on Sunday. But I think it's important to put it into context. The Biden administration, for the first time, used taxpayer dollars to fund this abortions within the military. That's never been done on the National Defense Authorization. In fact, we cured that in the House with our NDAA bill that will be conferenced with the Senate. So my whole point was that I don't think one senator blocking all these nominations is really the more productive route. I think the best route is to deal with this in the conference committee that we will have House and Senate to ensure that taxpayer dollars not being used for abortions in the military. I think holding up these nominations, I've talked to a lot of, brass at the Pentagon, and what I just worry about is that it will impact our national security. There's a debate about that, but I don't see how you can have all these openings unfilled without having some impact on the ability of the military to be ready.
We were actually joined around this time yesterday by Senator Tommy Tuberville himself. He made the case to us that this does not impact readiness, that the rank and file will be just fine, and we have too many generals anyway. You've called this paralyzing to the military, Congressman. What message does it send to China?
Well, if we don't have top key positions in the Pentagon filled, I think it's a sign of weakness. I think it projects weakness, and that's always very dangerous. It invites aggression. I know that Schumer does have the ability to put these nominees forward, and I would hope they can come to a consensus over there. But just holding up these nominations ad infinitum, I think is dangerous. It's well-intentioned. I think he and I both agree, that being Senator Tuberville and I both agree, that taxpayer dollars should not be used for abortions in the military. We fixed that in the House. We're going to conference with the Senate, and I feel very confident that that will be not be a part of the final package. But it's all about the method and how you want to achieve the same goal. And I think holding up these nominees in key positions at the Pentagon does not send a very good message.
When you look at When you look at China, we have to ask you what you make of Huawei coming out with this phone that looks like they use technology, the exact technology that there are export controls on China and Chinese companies, CSMIC and also Huawei, both on the entities list, to make sure that China actually doesn't have these capabilities, yet a phone arrives. Do you think the export controls that are on China right now are working?
They're not being enforced. SMIC has American component parts. This 7 nanometer chip is a very advanced chip, and it's now in Huawei's 5G smartphone. This is very disturbing and a major violation of our export control laws. I sent a letter today to Secretary Raimondo, and I have jurisdiction over BIS, which is a Bureau of Industry and Security in charge of export control, because this was not enforced. And now they've got this very advanced technology, 7 nanometer chip. When you look at the hypersonic program, that was built on the backbone of American technology. When it comes to the 7 nanometer chip, and you look at things like AI and the future of warfare, which will involve this kind of semiconductor chip, that is what is most disturbing to me, is that now China, they're very good. They don't really invent things. They're very good at stealing our technology. And this is another good example. And the timing, Anne-Marie, this was announced the day that Secretary Raimondo left Beijing, with a real slap in the face that, hey, now we got your technology. We got your most advanced semiconductor chip. We got to stop doing this. We got to stop selling to China our most advanced technology that they then that will turn and use against us if, God forbid, we have a conflict in the Pacific.
Well, so then, Congressman, is your committee working up sanctions on SMIC, or should we be talking about a total severing, a total cutoff of our technological relationship with China at this point?
We can't cut all trade, but I would argue that with respect to certain sectors, like the advanced semiconductor chips, like AI, like quantum computing, this is something I've talked to the Commerce Department about, making it more rather than company specific, because China will change the name of the companies. But if you make it sector specific, to me, that's a better way to handle this. That way, all exports regarding AI cannot be exported to China. All exports regarding quantum and advanced semiconductor chips. And that way you deal with it in a very, I think, a broader blanket that I think would apply. We're going to have commerce with China. They're a big market for the United States, and we buy a lot from them. But when it comes to national security supply chain, like semiconductors, like critical minerals, rare earth minerals, and medical, we need to start pulling that supply chain out. The reason I introduced the Chips for America Act and got it passed was Secretary Pompeo came to me and said, we got to pull supply chain out of Taiwan because TSMC controls 90% of the advanced semiconductor manufacturing for the world. So imagine a scenario where China invades Taiwan with a blockade and cutting the sea cable. Then they either own or will break 90% of the world's advanced semiconductor chip manufacturing.
When you look at what happened this week, we saw Kim Jong-un make his way to Russia to meet with President Putin. The individual who could probably put the pressure on both those two leaders, those dictators, would be Xi Jinping. Do you think it's wise the administration still seeks a meeting with Xi Jinping to try to make sure at least they're putting pressure on Beijing to then put more of a pressure on both its neighbors in Russia and in North Korea?
Look, I think it's always good to have meetings and have conversations, but you don't concede certain things. I think we saw like certain export controls were pulled back prior to these meetings. You don't make concessions before just to have a meeting in and of itself. You have to negotiate out of strength and leverage, not out of weakness. And that's my concern about, the meetings that took place. I don't think China's going to ever talk Kim Jong-un down because, Chairman Xi is a direct ally of Putin. I mean, they made this unholy alliance at the Beijing Olympics just weeks before the invasion into Ukraine. And the idea that they're not joined at the hip is absolutely false. I mean, this is an alliance of China, Russia, Iran, and North Korea. North Korea is going to start putting their stuff in. Iran's already putting their drones into Ukraine. We're even seeing, mercenaries from Cuba, going into Russia and into the Ukraine fight. So this is really playing out very dramatically between these dictators and the rest of the free world. And that's really what's at stake right now.
These are dangerous times, and we're glad to have you with us, Mr. Chairman. Michael McCaul.
Thanks, Joe.
Congressman from Texas who chairs the House Foreign Affairs Committee. Don't be a stranger. We'd like to stay in touch with you on these issues because, Anne Marie, not only aren't they going away, but they're only going to get more pressing in the weeks ahead.
Yeah, exactly. There's a lot of concern. Obviously, he's calling for, he always thinks dialogue is a good way forward. The issue I think this administration has, especially as we go into the election, is the rhetoric from most other of his colleagues in the GOP caucus is going to be bashing the admin on China. And it's really going to feel like a game of who can out-hawk the other when it comes to Beijing.
Yeah, how true. Interesting comments on our situation domestically as well. Not a fan of what Tommy Tuberville is up to. He was one of the first, maybe he's the highest actually ranking Republican on Capitol Hill, to call him out on the issue of readiness. And you wonder if others will be inspired to follow.
Right. And Tommy Tuberville said what to us yesterday? We are not a communist country, his words, and that if they want to, they have to change the policy first, or at least vote on changing the policy, and then he will drop his blockade. By the end of the year, Joe, it could be more than 600 nominees.
Well, that's the number that we've been hearing. Right now, we're over 300, which in itself is a major problem, according to many. Let's bring Wendy back in. Wendy Benjaminson, Bloomberg Washington senior editor, was with us as we spoke with Congressman McCaul. I think it was Jeannie Shanzano who talked about Mitt Romney as one of the last grown-ups. We just learned today he's not seeking re-election. Right. You could say that Michael McCaul is not one of the last grown-ups, but one of the grown-ups in the House who might wrest control from a chaotic Freedom Caucus. What do you think?
Well, that would be interesting if he could pull that off. But no, you're absolutely right. Mike McCauley's chairman of House Foreign Affairs. He's been involved in issues ranging from the border to Iran for many, many years, and he's a serious member of Congress. So it was interesting to hear him call out Tuberville. And Mitt Romney leaving is just another one in a long, growing line of Republican moderates. And I say it like that because I'm thinking of Liz Cheney, who is more conservative than her father, the former vice president, on many social issues, on many fiscal issues, and yet she wasn't conservative enough for the Trump acolytes in Congress. She's gone, he's gone, and others will probably follow. Adam Kinzinger's gone, so there aren't many of them left.
The issue is they actually are conservative in their policies, but their rhetoric does not follow the Trump world of which really is populism.
Absolutely, yes.
And Mike Pence gave a whole speech trying to decipher the difference between that.
And let's not forget, Mitt Romney was the party's standard bearer. He was the nominee just, this was 11 years ago, but only 11 years ago.
People forget this. He was the party leader. Now you bump into him, outside of the cafeteria in the Senate office building. You see he's leaning against a brick wall answering questions on cable news, but it's a heck of a way to make a living, I guess, Anne Marie.
Yeah, it certainly is. The interesting is who's going to take his seat.
That's right. And in the state of Utah, Wendy, I'm guessing it's not going to be another Mitt Romney. He would have potentially had trouble in being reelected, so here we are.
It's interesting, the politics in Utah, because while they are extremely conservative, the kind of people we're talking about, Romney, Cheney, that sort of Western conservative, they are not pro-MAGA very much. I mean, Mike Lee, the other senator, sort of scratches that itch for them, right? He's very conservative, pro-Trump. The people running, the ones who are ahead, are not MAGA Republicans. So there may be a Mitt Romney 2.0 coming through all of this in the very end, but it's hard to tell a year out.
You wonder what role he will play. Not that I wanted to turn this into a whole Mitt Romney discussion, but he's not retiring, and I suspect that he'll play a role in national politics to some extent or another. I just can't imagine.
I wonder in a future administration if he'd be tapped for a Treasury Secretary role,
Commerce,
State Department role.
Yeah.
State is what he would want, right, Wendy?
I would think so,
I suppose at this point of his career. Well, with regard to the conversation we had with Chairman McCaul, and by the way, if you didn't hear our full conversation, subscribe to the podcast, and we're going to bring it back later on. Anne Marie and I will present that in TV form on Balance of Power at 5 o'clock Washington time on Bloomberg TV if you want to join us. But the idea of the shutdown here, Anne-Marie, does not seem to be getting any easier. He spoke optimistically about this, that we're fooling around with the rules here, but the clock is ticking.
I still maintain that how difficult it is for Speaker McCarthy, even though potentially some Republicans are sounding more optimistic, a lot of individuals are coming out with different demands. If McCarthy doesn't meet that demand, they're not going to sign on to the CR. Right. So one person's demand might be the impeachment inquiry. Another person's demand might be, I'm not voting for Ukraine. Another person's demand says, I want stricter asylum provisions. Yep. How do you meet all of these while still also keeping the moderate Republicans from Biden districts? Biden won their districts, but they're representative. How difficult is November of next year for
That's
that?
Right. By the way, there's one member with all of those concerns, and his name is Matt Gaetz.
No continuing resolutions, individual spending bills or bust, votes on balanced budgets and term limits, subpoenas for Hunter Biden and the members of the Biden family who've been grifting off of this country, and the impeachment for Joe Biden that he so richly deserves. Do these things or face a motion to vacate the chair.
Wow. How'd you like to come back to work with that?
His line is he's going to get to the office every day, he says, which is the Capitol, and he says he's going to say the prayer, say the Pledge of Allegiance, and then vote for motion to vacate. Those are the three things he cares about right now, every single working day. It's your tax dollars at work.
This is why we have Anne-Marie and Wendy to help us through these times. Great to see both of you in here. Wendy, as ever, Wendy Benjaminson, my desk mate and show partner, Anne-Marie Horduran. Come back again.
Yeah, I'd love to. I like this radio on TV.
Right, exactly. It's very cool. And if you want to join us on YouTube, it's easy to do. Just search Bloomberg Global News and join us here in our snazzy studio in Washington, D.C. All right, it's been a minute since we checked on Wall Street. Let's get up to date on trading right now. Of course, we go back to New York for that. Here's Charlie Pellet.
All right, I thank you very much, Joe Matthew. We've got the Dow fluctuating since our last update. Higher now by 2 points, was negative just a couple of minutes ago. We're on top of the markets for you. Right now, the S&P up 11, a gain there of 0.3%. S&P, by the way, CPI Wednesday, we are holding close to session highs. We've got NASDAQ up 66 points right now, higher by about 0.5%. 10-year yield 4.24% with a 2-year that's yielding 4.97%. Spot gold down $4 the ounce to $19.09. West Texas Intermediate crude down 0.3%, 88.55 a barrel, and Brent at 91.90. Barrel of Brent down by about 0.2%. So it is an update for now. Stocks, bonds, and the dollar seeing small moves with a mixed inflation report, reinforcing speculation that the Federal Reserve will pause its rate hikes, but refrain from calling the end of its tightening cycle. Also out today, the Mortgage Bankers Association is reporting loan costs are on the rise, sending demand to an almost 30-year low. And with more on that story, here's Bloomberg's Vinny Del Giudice.
The average rate on a 5-year adjustable mortgage rose last week to the highest in more than a decade, 6.59%. Fixed rates topped 7%. A weekly gauge of loan applications, in turn, fell to the lowest since 1996. Additional Federal Reserve tightening aimed at nagging inflation could send mortgage rates even higher. Vinny Del Giudice, Bloomberg Radio.
American Airlines Group has slashed its third-quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. Shares of American Airlines Group, they are now down by 5.7%. Recapping, we've got stocks higher across the board, with the S&P up 12 right now. That is a gain of 0.3%. I'm Charlie Pelleton. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we do thank you, and we appreciate your joining us here on the radio and on YouTube, the fastest show in politics. It does go by so quickly, and we haven't even mentioned, outside of Charlie Pellet watching Wall Street, the CPI today. On another day, this might be our lead story in a world in which political fortunes and futures rest on the trajectory of inflation. Bloomberg Economics writing today, Fed to fade, hot headline CPI, but not car insurance. Let's put it together and what these numbers mean that we got at 8:30 this morning with Anna Wong, Bloomberg's chief U.S. economist at Bloomberg Economics. Anna, it's great to see you. A lot of anticipation going into the print today. What did this CPI tell us about the trajectory of inflation, maybe a little bit hotter, an emergence of some sort, and what it might mean for the Fed's calculation.
Yeah, so going into today's report, everybody expected a very hot headline, and indeed we got that. But the surprise really was that the core CPI was hotter than most people, including ourselves, thought. But our take of it is that generally it is just a blip. If you look at the medium term to longer term trend of inflation, it is going down. But the question for the Fed and also how they will decide whether to hike or hold rates constant in the next couple of meetings is whether they interpret this report as suggesting that the blip in inflation is just a temporary, or is it a turnaround of a downward trend of inflation. Tomorrow we're going to get retail number, and I think that will be a particularly informative numbers. We are expecting to see negative print because consumption is slowing in the economy. So if the Fed agrees with us that, in fact, if they look at the consumption and realize that consumers are not that resilient, they're retrenching, then they may not raise rates again in the rest of the year.
Wow, so the Fed may well be done, in your view.
Yes, but we were more confident about that assessment before today's CPI report.
Okay. All of that said, in terms of the longer-term trajectory, when we're in the granular here month to month, what is Bloomberg Economics forecasts for, say, 6 months from now as we get into, this is a political show, we're wondering about where it will be in the throes of a presidential campaign next year?
Yeah, so we are seeing that for the end of this year, we are expecting core inflation, which is headline excluding food and energy prices, to be around close to 4% on year over year. By middle of next year, we're seeing that it would be around 3.5, still above 3, right? 2% is the Fed's target. So we still expect that by the end of 2024, around the presidential election, inflation still would be around 3%.
Wow. So job still won't be able to declare victory. Then the other question is your forecast on the recession, because you are out ahead of a lot of the major banks, which have since pulled back their forecasts for a recession next year. What's your thinking on this now?
Well, I think that we are going to see whether we will get a negative payroll report in the next couple of months. We still think it will happen. UAW, the United Auto Workers, will decide whether they will strike around midnight tomorrow. And if they do, then we do expect a negative payroll in October. And if the U.S. government does shut down in October, we are also going to expect to see an increase in unemployment rate in October. So basically, the Fed will get a pretty bad payroll report 2 months from now.
So when you add, let's say, worst case scenario, a government shutdown, and of course the duration would matter here. Goldman Sachs today predicting a 2 to 3 week shutdown, which would be something. That's a lot different than a weekend. Couple that with an auto strike. What kind of a combined economic effect would that have? Is that the difference between a recession or not?
Yes, exactly. It would. So if we're talking about a month-long strike and a month-long shutdown, and by the way, these two things overlap with each other, we're going to, we expect that the UAW strike will shave off about 130K in jobs. And so I think the trend, non-farm payroll, monthly growth is about 140,000. So that's about, combine that with other layoffs that we're seeing in the economy, that will get you just right below zero. And the 1 month long government shutdown will raise unemployment rate by 0.2%. So that would get you to an unemployment rate of 4%, which satisfies the Psalms rule, which has been accurately identifying recession in the past, in the past 50 years. So it's just, these two things, UAW strike and government shutdown, just make or break whether we have a recession.
That is an incredible revelation. Before either of these happen, knowing that in advance, yet expecting them to still take place. I don't know. Maybe that's the definition of insanity in some special way here. But pretty remarkable words that we're all going to remember here from Anna Wong. She just worked that on her head live on the air. That was incredible. As I look to WTI today, 88.56. Bob McNally from Rapidan Energy predicted $100 a barrel here just a couple of days ago. If that happens, a similar corrosive effect. on inflation.
Yeah, not only on inflation, it's really a stagflation. And that was actually our baseline outlook for the end of this year. So you're going to see slowdown in growth. At the same time, you have headline inflation stubbornly high. And, you know, back in 2008, we also had an oil shock, positive oil price shock at the same time as the economy plunging down the cliffs.
Right, sure. We haven't even mentioned the war in Ukraine, which could also have an impact on oil prices feeding into this. So $100 a barrel oil, an auto strike, and a government shutdown mean a very ugly forecast for Bloomberg economics.
Those are certainly risks. And I sure hope we can avert those risks. But if any two of those three happen, we're going to have a recession.
2 out of 3 is a recession.
Yes.
Wow. There you have it from Anna Wong. Thank you, Anna, for sharing your expertise. Anna Wong works out of the Washington Bureau here with us at Bloomberg Sound On, and we're lucky to have her, Bloomberg chief U.S. economist. Are lawmakers listening to this? Are the unions and auto companies listening? The next couple of weeks are going to tell us a lot, for better and worse. In Washington, I'm Joe Matthews. Some final thoughts ahead. This is Bloomberg.
News headlines on Bloomberg Radio.
From Bloomberg World headquarters. I'm Charlie Pellet. A U.S. Army spokesman says Microsoft's improved combat goggles have passed their first round of intensive testing by soldiers, and the tech giant has been awarded an order for another batch to be used for a make-or-break combat evaluation in 2025. Microsoft up now by 1.2%. Citigroup is preparing for a wave of job cuts as CEO Jane Fraser restructures the Wall Street giant to operate from 5 main businesses. Citigroup shares, they are higher on that word, up by 1.8%. But with more on that story, here's Bloomberg's Shonali Basak.
You have Jane Fraser, the CEO of Citigroup, here just taking an axe to Citigroup's management structure, now having 5 business heads with all of the groups rolling up to those 5 in particular. Now, who does that include? It includes and markets head Andrew Morton as part of that team. And very surprisingly here, you have Peter Babet, the head of Asia Pacific, now becoming the interim banking head, leaving open a position at Citigroup and putting them on a search for a new division of one of the top 5 M&A, IPO, and debt underwriting advisors across all of Wall Street.
And Bloomberg's Shonali Basak keeping an eye on Wall Street for us. Citigroup shares again up now by 1.6%. Amazon is making its first foray into support for home ownership, putting up $40 million through nonprofit partners to create affordable housing. Amazon shares, they're up right now by 2%. And those are some of the company stories we're following at this hour. And this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington here on Bloomberg Radio and on YouTube. Thanks for joining us. We'll have some new numbers on the Republican race for president. They're just out today. After we get you up to date on the rest of the stories we're following, let's get world and national news covered now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. Escaped Pennsylvania convict Danilo Cavalcante is back in custody. He was captured today by Chester County authorities, ending a nearly 2-week manhunt. Lieutenant Colonel George Bivens with State Police says Cavalcante was found in a pile of logs behind a John Deere store. He tried to crawl away from police.
One of the Customs and Border Control teams, BORTAC, had a dog with them. They released the dog. Some of our PSP CERT members were also there, had him surrounded. The dog subdued him, and team members from both of those teams immediately moved in.
Bevins says no officers were injured in the arrest, but Cavalcante did sustain some bite wounds from the dog. Back from the G20 and a focus on geopolitics, President Biden plans to turn his attention to his re-election and a fundraising blitz for the rest of this month. We get more from Bloomberg Government's Jonathan Tamari in Washington.
There's been a lot of concern from Democrats recently about polls showing a really tight race again in 2024, and is he up for the job? And I think this is a way of them trying to say, look how strong he is, both politically in terms of fundraising and maybe just in terms of his ability to be active and out on the campaign trail as well.
Bloomberg Government's Jonathan Tamari. 2024 is looking far from a landslide, according to a new Quinnipiac University poll released this afternoon. President Biden and former President Trump are locked in a tight race. Tim Malloy is a polling analyst with Quinnipiac.
Dead tie has been all along. It's 47% to 46%. Even without a margin of error, that's a tie. So right now, if the election were held today, we'd be up all night and maybe for weeks trying to figure out what it really means.
Quinnipiac's Tim Malloy also says Trump's wide lead for the GOP nomination is getting even wider. 62% of Republican voters support the former president. That's up from 57% last month. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
All right, Nancy, thanks. Let's dig a little bit deeper into that poll. I'm curious to just, take a snapshot here of the horse race. You heard the hypothetical there from Nancy. And look at this lead for Donald Trump. This is, again, Quinnipiac national poll here. Donald Trump at 62%, up from 57%, which now gives him a 50-point lead in this campaign. Ron DeSantis in second place at 12%, and it's single digits down from there. Ramaswamy 6, Haley 5, Pence 5, Christie 2, Scott 3. Everyone else except Asa Hutchinson has a big Jippo Giro, 0%. Asa, the former governor of Arkansas, at 1%. Now, this is all important right now
Because while it may not predict the outcome of this Republican primary, it will help determine who is on the stage for the second Republican debate. That's this month, Simi Valley, right? The Reagan Library. There they will be, standing in front of Ronald Reagan's Air Force One. And you need 3% in 3 polls, plus a certain amount of fundraising to get on the big stage here. So at the moment, it's going to be problematic for some of these candidates to get on stage. Certainly, Burgum, Hutchinson, Hurd, who was not on the stage the first time either. Elder, yeah, even Chris Christie at 2% here. They're going to be looking around at polling data and individual donations from fundraisers coming up over the course of the next week or two to determine who is actually going to be on stage in California. And of course, we'll keep you posted on that every day here on the fastest show in politics. That's what we do, not only covering Washington policy every day from the White House to the Capitol, but digging in on the presidential campaign trail. A lot from D.C. today, certainly in the U.S. House, where lawmakers have been busy, and we're going to have a lot more on this on Balance of Power coming up later on Bloomberg TV. Hear our conversation with Chairman Michael McCaul on this day that military funding couldn't even get a debate in the House. We could be heading for a shutdown sooner than later. On to New York now. See you then. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Interactive Brokers Studios in New York. We're streaming on YouTube and Bloomberg Originals. It's Wednesday, September 13th, 2023. I'm Tim Stenevec, along with my co-host, Bloomberg TV correspondent Simone Foxman, in for Carol Masser once again this afternoon. Simone, good to have you back with us.
Glad to be back.
How are you? Happy CPI Day.
Happy CPI Day. I mean, market's kind of yawning, right?
Yeah,
Overall.
I think that's a really good way to describe it. We're seeing small moves from stocks, bonds, the dollar. We're actually seeing the Dow down about 0.2%, the S&P 500 up fractionally, the NASDAQ up by more than 0.2%. I really like how Chris Zaccarelli, Chief Investment Officer at Independent Advisor Alliance, summed it up to our Bloomberg News team earlier this morning. He said, inflation is high enough to keep the Fed still in play, but not hot enough for a shift away from the, quote, Fed is almost done narrative. So
yeah, that's interesting. Because
a shrug emoji.
And I guess Bloomberg Economics really points out the idea that it's going to take a while. And as these sort of inflationary pressures sort of slowly seep out of the economy, not everything's going to go in one direction all at the same time.
Yeah, the big concern that I have is energy prices. And we're going to talk a little bit later about energy, sort of a different context. Big Oil's climate fix is running out of time to prove itself. It's today's big take. Also, Simone, tech lenders discuss AI policy in a closed-door Senate meeting. We're going to hear from Elon Musk a bit later in the program.
It's a good day whenever you hear something probably wild from Elon Musk.
That's a good point.
And we're going to also get the Business Week's B School ranking out this year. We'll tell you which school made the top spot. And there's a hint, it may be a familiar one to many of you.
All right, that's the only hint we're going to give. But if you listen to the program, it's a familiar school. Also, how to connect the world to fast and affordable broadband service. Does Elon Musk have anything to do with this, with Starlink?
He has something to do with that, but I think we're going to talk to a different company, real innovator in the space. But finally, ARM set to price its IPO today. It will trade tomorrow, so we go from CPI Day to ARM IPO Day.
ARM Day.
All the three-letter acronyms here. How does this set the stage, not just for the company and AI, but what the IPO market looks like next year?
Yeah, we've already seen an uptick in companies filing for IPOs just in the last couple of weeks. I said earlier this week on the program, I'm just waiting for Birkenstock. And then, of course, just after I said that, Birkenstock did file for its IPO. So we'll see who's next. Well, we got a great program coming up. Before we get to our radio program, let's head on over to our TV colleagues because Bloomberg's Countdown to the Close starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close.
Romaine Bostic alongside Bonnie Quinn. We're joined right now by our colleagues Tim Stenovic, Simone Foxman in today for Carol Master. Welcome to our audiences across all of our Bloomberg platforms, television, radio originals, and our partnership with YouTube. Tim, there are so many big headlines today, the macro, the micro, and everything in between. I'm sure you got to be looking at something very consequential to this market.
Yeah, I am. There's a new job offer out there.
Yeah.
Okay.
Okay.
You can follow Taylor Swift around to different concerts around the world. And you can write about it for USA Today. Did you see this? Is that the big headline you were referring to, Romaine?
I'm not actually actively looking for a job.
That's not.
That's an interesting job post.
Even if you weren't looking for a job, this is one that sounds pretty fun. You are meant to capture the music and cultural impact and quench an undeniable thirst for all things Swift. I mean, frankly, America is obsessed with Taylor Swift, and boy, Gannett understands.
I think it's a genius idea from Gannett. And we have to say you'd be writing for Gannett, obviously USA Today, but also the Tennesseans. So let's not forget that, you know, you'd be writing for people in Tennessee specifically. But she's making more than $10 million a night on her tour. She is an industry in herself. She should be covered. She should perhaps be in the S&P 500 at this point.
So, I mean, I'm just curious. You know, I'm always a glass half empty kind of person. But I'm curious here.
We love you, Romaine.
They're just now posting. Hasn't she been on tour like all summer long? By the time they hire this person and get that person out there on the road, Taylor Swift's going to be back in, you know, just chilling or whatever she's doing.
Maybe the team over at Gannett saw the Bloomberg economics analysis that our team here at Bloomberg did of the economic impact of Taylor Swift and, of course, Vonnie, of Beyonce fans as well. $5.4 billion will be added to U.S. GDP in the third quarter as these fans spend their money on concerts.
It's interesting, too, we talk about those concerts. Remember when they kicked off both the Taylor Swift tour and then the Beyonce tour early this year, there was all that talk about the inflationary impact that it was actually having because everyone was spending so much money on, you know, flying to these locations.
I mean, you flew to a Beyonce concert, right?
I did.
Yeah.
Yeah.
I mean, I think there's definitely a little bit
Not
of
to
skepticism.
brag, but I had great seats, too.
Houston?
Again, once again, doing something without me, no invitation. It's fine. I don't take it personally. I don't take it personally at all. No,
you guys, I'll tell you what you can do for each other. You can rent a Cinemark theater because that's what they're doing now after the Barbie experience. They're saying you can rent for $800 plus tax a showing of the Taylor Swift era's concert film for you and 40 of your closest friends. So that's 2 of you.
And I will point out this AMC plan to show the Eras tour, it actually had broken that single day pre-sale record ever. It was 16.9 million. A Spider-Man film had that. But so many people want to see the Taylor Swift concert, can't afford, can't figure out how to get Taylor Swift tickets, that instead they're going to go in.
I mean, you're in a dark movie theater. And
definitely not, but it's the way that I'm going to have to see the concert.
Will there be friendship bracelets?
That's the real question, right? There probably will be.
Okay, maybe I'll check it out. I already traded in my cowboy boots. I didn't know I was still going to need them.
You are. That was one of the eras.
There's only one of Taylor Swift, guys. There's just like her song, there's only one of me. I've been trying to throw puns in this entire time.
Do you actually care about the CPI report?
Yeah.
No.
Do you?
Okay, not really.
It wasn't. I mean, it wasn't.
Well, I'll tell you what.
Do traders care about it?
Apparently not. If you look at what's been going on in the market today, I mean, it really didn't give you anything to hang their hat on, which I think is one of the reasons why we're talking about Taylor Swift and Beyonce. Was anyone else on tour this summer?
Not. U2 is going to be opening up the Sphere in Las Vegas. Did you see this in Bloomberg Business Week?
Yeah, we talked about the Sphere yesterday. That's the James Dolan thing, which is actually pretty cool. I think it's interesting. I didn't know U2 was still touring, but I guess anybody can tour. The Rolling Stones can have a new album.
They're going to do like more, a couple weeks of nights, and tickets are going to start at $125. Which, after seeing how much Taylor Swift,
$125 for U2. Where are those seats?
I don't know.
On the concourse?
They're
somewhere?
in the Sphere.
In the Sphere, right. Outside.
We're not talking Bruce Springsteen here, guys. But I'll tell you what the CPI report did tell us. It's that you should probably fly and not drive to these concerts, right? Because we saw CPI sort of improving a little bit for airline tickets, even though they don't feel cheap, but definitely disimproving when it comes to gasoline and car insurance.
Well, I was just going to say nobody can afford to drive anymore because car insurance has gone up so much. So that's one of the big takeaways from CPI. Don't go anywhere, guys, because we are going to be back together talking probably not about Taylor Swift once again. I think we talked, we kind of used up our allocation for this afternoon. We're going to be back together, though, on live TV, radio, and YouTube. Also, Bloomberg Originals, 4 p.m. It's Beyond the Bell when we take you through today's market close.
Simone Foxman and Tim Stenovic. And let's actually talk more about that CPI data we got today, because that was the big market story. It showed inflation rising by the most in over a year, especially on the back of prices in the pump. You know, the key number, the headline figure, 0.6% month on month, 3.7% year on year. But we'll dive really deep into some of these details and what it means for the Fed next week. So with us are Stuart Paul of Bloomberg Economics. He joins us in studio, as well as Mike Regan, senior editor for markets at Bloomberg News, who joins us from New Jersey. Guys, thanks for coming and joining us. Stuart, let's start with you. Digging through the report, do you think there was anything in here that particularly surprised Fed officials?
The thing that probably surprised Fed officials the most was the uptick in new car prices. We've seen
new car prices, not car insurance.
Correct, new car prices. So car insurance is downstream of car prices. We saw car prices that had been rising for quite a while. When people see their insurance costs change, or when they move state to state, and we see insurance rates get adjusted, it gets adjusted based on the replacement cost of the car. So the fact that we saw car prices rising throughout the pandemic as inventories remain low is the major cause of car insurance prices right now. New car prices, on the other hand, is still being driven by demand. The Fed is trying its best to lean against interest-sensitive spending. It's working for used autos, meaning perhaps those people at the lower end of the income distribution are starting to feel the pinch a bit more. I would think that the 30 basis point increase in new car prices is the sort of thing that would catch the Fed by surprise in this report.
Go ahead.
Yeah. Can I understand exactly why that would happen? Because haven't we been in the situation where new cars in specific, there've not been quite enough of them, and that's really driven by the supply side rather than the demand side. So isn't this something the Fed can't help?
It's something that they can't help except for continuing to lean against interest-sensitive spending, right? If they continue raising financing costs for those who are still trying to take delivery or who have been hoping to take delivery of that new car that they just haven't quite been able to get their hands on because of those supply chain issues that you mentioned, they're just going to keep trying to lean against that demand as best as they can.
Hey, I want to bring in Bloomberg Markets senior editor Mike Regan joining us on Zoom from New Jersey this afternoon. Mike, what stuck out to you? We talked about new car prices. We talked about car insurance. What were your takeaways after spending a few hours looking through this CPI?
Well, Tim, I think at the end of the day, when you add it all up, there's some surprises here and there, but there's no real smoking gun to really, I think, change the calculus for the Fed, especially obviously for next week's meeting. No one is really pricing in or expecting any move in rates next week. For the November meeting, the probability based on Fed fund futures has crept up a little bit, still below 50%. But I think when you look at this tame market reaction, the market is realizing, all right, maybe there's one more rate hike to come, maybe zero more rate hikes, they're done. The difference between those two is sort of not really life and death for the market. So I think that's why we saw basically kind of a really muted reaction to this. One important thing I think about the inflation reports we've seen from the pandemic and until now is that this major surprise is gone. Number here and there might have been a few basis points above expectations. That core rate month over month was a little bit above expectations at 0.3% versus 0.2%. But the days of those massive inflation surprises are gone. And I think that's good as far as taming the volatility in the market, in that forecasters, economists are much closer in the ballpark of what they are predicting for inflation versus sort of those days when no one had a clue in the aftermath of the pandemic. And that's what really led to the really volatile whiplash reactions in markets. So I think, Tim, that's kind of my main takeaway for tonight.
Yeah, but Mike, how do you play this then if you're the Fed? Because I feel like November is all important. Will they or won't they is sort of the question here, and there's no halfway. How do they signal maybe something that kind of fills both buckets? Yes, the economy is slowing to a degree. No, we still want to proclaim our hawkishness.
Yeah, Simone, I think it goes back to this whole notion that the Fed will repeat over and over again. Chair Powell has repeated a bunch of times, and that the effects of policy tightening can take a while. They can have a long lag. And I think what the market's trying to suss out right now is what effects are still in the pipeline from all the tightening we've seen. I'll give you an example. If you look at the worst performing stock in the S&P 500 today, it's CBRE, the big office real estate company, out at the Barclays conference today, saying that the worst isn't over for them. They expect earnings per share to fall in the high teens percentage range in the current period. CFO saying the recovery clearly has been pushed back. And the other thing I look at is these regional banks. A lot of them also presenting at the Barclays conference today. And hey, that KBW regional bank index, it's stabilized, but we're still talking about regional banks off about 30% from their peak earlier in the year. So it's kind of this interesting disconnect between sort of the meat and potatoes, middle market lenders like that are still obviously struggling. And this rip-roaring market led by tech that we saw earlier in the year. So I think if I'm the Fed, I'm looking at, okay, what more in the pipeline of this long and variable lags in monetary policy has yet to make its way through the pipeline and still going to cool off the economy. And if you look at some of these issues that I've been talking about, there's a case to be made to say, okay, maybe we do pause for the next few months and digest this, see what it looks like, say, in the new year. So,
well, speaking of seeing what it looks like, Stuart Paul, come on back in here and talk about this note that you have out that about the NBER recession indicators are about to flash red, because this is a little concerning, at least my takeaways.
Yeah, so we have to be thinking about what's coming down the road now that CPI is behind us. So starting tomorrow, we're going to be thinking primarily about retail sales and a host of other indicators that the NBER looks at. They have 6 primary indicators that they look at for timing business cycles. Industrial production has already stagnated. Real retail and wholesale trade sales has already stagnated. And we're expecting to see a severely negative real retail sales print tomorrow, not just because of today's inflation of 60 basis points, as we saw in the CPI report, but we're expecting to see even a negative nominal number of 20 basis points. So it's going to be a pretty rough one. Add into that the potential for a UAW strike, which would strip out any sort of bright spot that's existed in those 6 indicators, one of which has been payroll reports, the other which has been total employment as measured by the household sector, and things are looking a bit rough. Given the fact that we've also seen slowing wage growth, you would expect that personal income less transfer payments, another one of the 6 indicators, is also going to start showing a bit of weakness. And the final one, real PCE spending, given what we're anticipating for real retail sales in tomorrow's number, is going to get a bit rough.
So what's the big takeaway here?
The big takeaway is that everybody has this soft landing optimism, but the cumulative effects of rate tightening is really starting to show up in a bunch of different ways, particularly in the 6 indicators that the NBER looks at. Now, it does take about a year for the NBER to come around to what the data are saying. They're academics who are meeting in Washington.
I believe Bloomberg News described them as eggheads.
Leave that to the news folks on the econ side. I'm going to say respectfully that they're very intelligent and wise people making prudent decisions.
I said that in a respectful way, but thank you.
So a year from now, they could be getting together and saying, you know what? It's that retail sales report that came out in mid-September covering the August data that showed that this might have been the turning point. Now, we at Bloomberg Economics are anticipating a mild recession beginning at year end. And a big part of it is because when we think about the indicators that are so critical for the NBER and timing business cycles, we see where the puck is going, and it doesn't look that pretty.
I might just quickly here, because we only have a few seconds left. If we see that negative retail print, do markets, are they positioned to rip higher?
Yeah, I think, Simone, there's a good chance they'll think of that as the bad news is good news type of scenario, that the rate hikes are definitely done and that a cut is the next thing on the agenda. I think that's a good call. That's probably true.
All right, a big thank you to both of you for joining us. Stuart Paul is Bloomberg Economics U.S. economist, and Bloomberg Markets senior editor Mike Regan. This is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. The S&P 500 index is fluctuating. The Dow lower, NASDAQ higher. And this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. S&P 500 index down now by 2 points, a decline there of 0.1%. We've got the Dow down 122, a decline of 0.3%. NASDAQ higher by 16 points, up now by 0.1%. A mixed inflation report this morning is reinforcing speculation that the Federal Reserve will pause its rate hikes but refrain from calling the end of its tightening cycle. 10-year yield at 4.24% with the 2-year yielding 4.97%. Spot gold down $5 the ounce now to $19.08. That is a drop of just about 0.2%. And West Texas Intermediate crude down 0.3%, 88.62 for a barrel of WTI. American Airlines Group has slashed its third quarter earnings outlook on a jump in jet fuel prices and payment of roughly $230 million in retroactive salary under a new contract for its pilots. But energy is certainly a source of concern for markets. What about those higher costs as a potential for bringing down prices? Regina Mayer is Global Head of Clients and Markets at KPMG.
Right now, we're saying there's roughly a 3 million barrel per day supply versus demand gap because demand continues to go up. And we think OPEC's purposely keeping about 1.8 million barrels per day off the market. And there's no global relief valve in this environment. We can't rely on the SPR. There's no other source where we can turn on a tap and oil will flood back into the market.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Oil stocks are trading lower. ExxonMobil down 1.1%. BP, its ADR is down 0.1%. Chevron down 0.5%. EOG Resources down 1.3%. And Pioneer Natural down by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Really appreciate it. And I love how you set it up talking about those oil stocks because we are going deep on oil right now. As we know, the world isn't getting off oil anytime soon, no matter how many EVs are produced or solar and wind farms are built. So to hit its net zero targets, the world is relying on a controversial technology pioneered by the fossil fuel industry. It's going to cost $4.5 trillion just this decade. We're talking about carbon capture and storage. It's also known as CCS. It's one of the most contentious solutions in the drive to cut greenhouse gas emissions. According to Bloomberg NEF data, just in the last 3 decades, governments and corporations have poured in over $83 billion into projects. But last year, the tech captured just 0.1% of global emissions. It is the subject of today's Big Take. It dives into technology's make or break moment. Steven Stepchinsky wrote the story. Joining us now is Mark Gongloff. He's an editor at Bloomberg Opinion, where he writes all about climate change. You can read this story and more from Bloomberg The Big Take at Bloomberg.com and, of course, at Bloomberg on the Bloomberg terminal. Mark, good as always to have you with us. First of all, carbon capture technology. It sounds pretty sweet, right? You take the carbon that is, the produced, you capture it and you sequester it. How does it work and does it work?
Well, it does work in theory, and in practice, in theory, it is a very simple thing. You take, you pump the pollution out of like a factory, say a steel plant or a coal plant or something like that, pump it into one tank, combine it with some chemicals that holds onto the CO2, pump that into another tank where you heat it up and you strip the CO2 out of it, and then dump it into a third tank where you turn it into liquid, and then you put it on a ship or in some pipes or a truck or whatever you want and send it to a well and lock it underground. So it all sounds extremely simple, and it's been around for a long time because it is so simple, but it's not as easy in practice to turn it into like a big scalable thing that we need.
So wait, does it work? It works then on a small scale.
Yeah.
But has anyone been able to do it on a big enough scale that gives some confidence that this could be a big thing?
Yeah, I mean, it depends on how you define big enough. I mean, we're, as Tim mentioned, the numbers, we're pulling like 40 million tons of carbon out of the air right now with this technology. So that sounds like a lot, but we're pumping 40 billion into the air as we speak. And so, per year, that is. And so you've got some, there's like a thing in Norway that's pumping like 1 million tons under the sea. That's been doing that for like 20 years. This technology has been around a while. They're doing that. They've been doing that for 20 years to avoid a carbon tax. So with enough financial incentive, they have been trying to ramp up this technology, but nobody has done it at the massive scale we need. And we're going to need like 800 million tons a year almost by 2030 if we're going to have any hope of this thing like magically solving our climate change problems.
Why are companies spending so much money on it right now? Is it a result of governments pushing them to do so?
That's part of it. They're not pushing them like with a stick. They're luring them with a carrot. And so like the IRA, the big climate bill that we passed last year, you can get $85, I think, per ton or something for the carbon that you store, which all of a sudden that makes the technology like economic for a lot of these oil companies. And they're looking ahead and they're seeing, okay, you know, Europe has a carbon market and they put a pretty substantial price on carbon. The U.S. is giving you a tax credit. And so you can take this carbon, stuff it underground, and then say, hey, you person, Tim, you're burning millions of tons of carbon. You pay me money as a credit for the carbon that I'm storing underground, and all of a sudden you take an oil company that's like it's watching its primary product get vilified, and people are trying to avoid using it. All of a sudden, it can take its sort of core competency, which is drilling into the ground and making holes in the ground, and turn that into a new revenue line, which is like carbon credits, storing carbon for other people that everybody wants to do right now.
Is there anything dangerous about putting carbon?
I was just going to add that. I was thinking the same thing as Mark describes this. It's like getting sent in under the ocean, which sounds okay, kind of.
Well, in theory, until it doesn't work, or something like that.
Well, that's the thing. In theory, it makes perfect sense because all the carbon that we've sucked out of the ground for the past 100 years was underground for millions of years before that. So you can theoretically take this stuff and put it underground forever, but it's easier said than done. They've had problems. This story that's in Bloomberg today, which I really recommend, it's really interesting. Chevron has spent tons of money on this project in Australia, and they keep having problems with getting enough carbon underground. And so they made these promises. They got tax breaks to put the carbon underground. And they said, we'll save this much carbon for you if you give us this much tax breaks. And then they haven't been able to put that much carbon underground, so they've had to go out and find other ways, buy carbon offsets and stuff. And so that's one thing. The danger of it, though, is in sort of the process that goes on beyond, because when I'm talking about moving carbon into different tanks and you're using chemicals and stuff, that also releases chemicals. You have chemicals that you gas off when you're like isolating carbon. The other thing is you have to think about these massive plants take a lot of energy. So in some cases, you're burning more energy to capture carbon than you are actually capturing the carbon. So it's kind of like, what are we doing here? Why don't we just build more EVs or something? I mean, that's what the environmentalists say. And I have to say, personally, kind of, there's a little bit of, I think we have to keep experimenting with it. But as it is right now, it kind of feels like maybe we should be doing something else with all this money. I don't know.
Well, that's a perfect segue to my next question, which is, you write a lot about climate change, you write a lot about energy, and you write a lot about the solutions to the crisis that we're facing. In your opinion, you write for Bloomberg Opinion, where does carbon capture fall on these list of solutions?
I think it could be very high. There's this carbon capture, and then there's also direct air capture, where you just stick a fan or a filter in the air and suck carbon directly out of the air. That also has a lot of promise. Taking carbon, planting trees, planting swamps, all that stuff, anything you can do to absorb carbon and put it underground, to me, is good, because at the rate we're going, we are not really stopping the use of fossil fuels fast enough to avoid more catastrophic climate change and warming happening in the future.
Beyond net zero.
Yeah, exactly. We're not going to meet net zero by 2050 at the rate we're going. That's why that's one reason why some environmentalists do want the carbon capture, because, look, it is kind of a magic solution if it works. And so I'm all for continuing to experiment with it, and we need to do everything we can. So I wouldn't rule it out. But right now it needs to find some sort of, they need to find some sort of magic solution for the magic solution to get it to actually be all that magical.
Well, but should governments be pouring the $83 billion that they've poured for the last 30 years into supporting, subsidizing whatever these projects if they don't work? I think the one in Australia was supposed to capture 80% of the carbon dioxide that was emitted, and it does less than half. I think, is that a good use of taxpayer money?
Arguably, no, because you could argue that it is another form of a subsidy for fossil fuel companies. These big oil companies get subsidies in the forms of tax breaks and all kinds of stuff. This is another thing where, like, here, we're going to give you all this money to help you find this new business. I mean, you can argue that they're a massive. They're huge in terms of our economy. They hire a lot, they employ a lot of people, they generate a lot of economic activity. So we maybe owe it to them to help them out, give them a hand. And again, we're looking for all the climate solutions we can get, but we do have to make sure that the money's being spent wisely.
40 seconds left, Mark. What is the number one thing we can do for a climate solution, in your opinion?
The number one thing is, there is no number one thing. The number one thing is to make, in terms of what we can do as people, is make sure that we have decision makers in office that understand this issue and are willing to take chances to fix it, that acknowledge there is a problem and are seeking solutions. So that's the thing that we can do. I mean, obviously we can, try to be green, but there's nothing will make as big a difference as, say, what Apple could do or what ExxonMobil could do. And so pushing to use our influence in that way is what we can do.
Did you see the climate-friendly Apple Watches yesterday?
Yeah.
Okay.
Yeah, I did see that.
Okay. Hey, Mark, we got to go. We love it when you join us. Mark Gongloff is Bloomberg Opinion Editor, talking all about and writing a lot about energy and, of course, climate change. Let's get a check now on the latest world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Senators have been meeting behind closed doors today with leaders of the big tech companies like Meta, Microsoft, Alphabet, and Tesla. They're seeking input on how to regulate artificial intelligence before it's too late. Elon Musk spoke during a lunch break.
I think the consequences of AI going wrong are severe. So we have to be proactive rather than reactive.
Musk calls AI a civilizational risk to humans everywhere. Republican Utah Senator Mitt Romney says he will not run for re-election. He made the announcement in a post today on social media.
I've spent my last 25 years in public service of one kind or another. At the end of another term, I'd be in my mid-80s. Frankly, it's time for a new generation of leaders.
Romney has demonstrated a strong independent streak while serving in the Senate. He was the only Republican to convict former President Trump in both his impeachment trials. Romney has also differed from his colleagues on issues like immigration. He supports a path to citizenship for children brought to the U.S. as children. Aaron Rodgers' season-ending injury for the New York Jets is reviving an age-old debate over artificial grass in NFL stadiums. We get more from Bloomberg's Nathan Hager.
It's not clear whether fake turf led to the Achilles tear that sidelined Rodgers just 4 plays into his season debut with the Jets, but the dots have been connected before. Odell Beckham Jr. busted his knee on SoFi Stadium's artificial surface during last year's Super Bowl in Los Angeles. About 14 of the NFL's 32 teams use fake grass. Replacing it would cost just $12 million, but maintaining a high-quality natural field can bring that price tag much higher. Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow lower, the S&P, NASDAQ, they are both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed right now, with the Dow down 67 points. S&Ps are higher by 5, and NASDAQ climbs by 42. The U.S. 10-year yield at 4.25%. Gold is down 4. Oil trading in the red, and Bitcoin is little changed. Among the main 11 S&P sectors, leaders were consumer discretionary and utilities. Real estate and industrials were under pressure. And leaders to the upside in the Dow, Honeywell and Microsoft, while 3M and Caterpillar led to the downside. 3M fell 6% after warning about a slow growth environment. And in other news, Lear dropped intraday on a lower than expected Q3 operating income forecast. Wrapping things up, Citigroup plans job cuts as it revamps its top management structure. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Hard to believe we're already there. Just shy of 18 minutes until the close of U.S. markets here. I should say U.S. equity markets. We're very pleased to have back with us Amanda Agati, Chief Investment Officer at PNC Asset Management Group. She joins us once again on Zoom from Philadelphia. Amanda, whenever you join us, I always think of the 12 days of Christmas that you guys do each and every year. But it's fall. It's not winter yet. So we're not quite there yet, are we?
We're not quite there, but we're starting the work to put the analysis together. So it's going to be here before we know it.
Okay.
We're talking about back to school shopping, but we'll be ready for the holiday shopping season, just a few short months.
Okay, that sounds good. In the meantime, what do things look like in the markets between now and then when it comes to equities and when it comes to fixed income?
We think it's going to be kind of a choppy second half here. I think if you think about all of 2023, we really feel like it's going to be very different in the second half, almost a tale of two halves. I think, based on what you're seeing today in terms of the CPI report coming in a little hotter than expected, a little bit of an acceleration there, that's kind of setting the tone for what we're likely